What is going on, everybody? Welcome on into today's live stream for CPI. It is August 10th. It's a Wednesday, and we are about to get, in about 15 minutes from right now, we're about to get the data from July's CPI reading in August. So, of course, it's about a week and a half after the fact. So, we are looking right now at the S&P. This is SPY, the S&P 500 ETF. And as we speak this morning, this is kind of pre-market action. It's obviously a little bit choppy and there's some chart errors, whatever, but it's up. Essentially, we finished the day on the S&P down 0.4% from the day prior, from Monday, and we are now up about 0.4% here in pre-market. So hope everyone's doing well. And we're about to get into the CPI. We'll look at Bitcoin, we'll look at the markets, we'll see how the reaction is. Here's the thing. I saw, yesterday a bunch of projections, CPI forecast projections, all that good stuff. We're expecting to get something. Let's see if I can pull up the official numbers from Market Watch or whatever. So we had a 9.1 top line reading last month in July for the June numbers. A lot of that had to do with gas, oil that were much higher than where they are sitting right now. So I think some of the projections I was seeing was somewhere in the 8.5 to 8.8 range of where they're expecting the CPI number to be. And that's kind of the deal. So in that 8.5 to 8.8, the thing is going to be interesting to see is this reaction to Denver. Okay, so here's the current expectation, 8.7. Is what they're saying. 8.7 is the number that they are saying, hey, we think we're going to see an 8.7 on CPI. Now, they have been wrong the past couple of months. These projections, these analysts, these forecasts, these economists, whatever, all these guys have been wrong, right? The thing is going to be, how do we ultimately react from this? Because at the end of the day, an 8.7 is still higher than where the Fed wants it, right? At the end of the day. And does an 8.7 get us anywhere closer to that Fed pivot than where we are right now, realistically? I mean, it's another month. I don't know how much closer it really gets us. I think the biggest thing for the market, I'm not really, to be honest, too, unless this number is substantially, off. Let's say it's an 8.2 or it's a 9.1, right? Like, unless it's substantially off, I really don't know. I think the market really wants to probably see at least 2 months in a row of this number coming down in a decent way. And going from 9.1 to an 8.7 really isn't that good. So at the end of the day, so let's see what happens. Let's see if the market reacts to that. I think it's going to be very, very telling how the rest of this week goes based on this data. So we're going to get the data. It'll get digested. There'll be some craziness, I'm assuming, right? The first few minutes of this data coming out. And then from there, we're going to get a much better picture of the trend the market's going to give us. Now, if we take a step back, CPI is coming out in 10 minutes, by the way. We take a step back and we look at the S&P. Here's our chart on TradingView. I'll pull this up. I've been loving TradingView's platform a ton. Free trial. There should be a free trial in the pinned comment or down below if you want to check it out. But this is, it's also free if you want to use it for free, not all the crazy stuff that I'm looking at. But we are at this rejection point, right? We got rejected this 417. So right now on the S&P, we've consolidated for I think it's actually the same amount of days. We've just consolidated for like 8 days back in here. This is back in end of May into June. Now here we are in end of July into August. We've consolidated for about the same amount of time. What happened last time was we got a massive flush. CPI came in higher than we thought, and we flushed down in a massive way. Actually, if we take a look at what this flush was, this flush from the middle of this range, we came down to those new lows about 12% in about like a week or two. Not even, about like 5-7 trading days. So like a week and a half. We have then bounced, obviously, from those lows to where we are now. We did get a CPI in there. I forget where it was last time, but it came somewhere in here. So last CPI, the 9.1, came out. We were somewhere in here. And we've essentially rallied since the last CPI. We've pretty much been rallying since that time. We came down a little bit further after that CPI, a day or two, and then bounced, made a higher low compared to the bottom, and have bounced. So here's where we sit right now, 413 in pre-market on the on SPY, the S&P 500 ETF. A couple other things I do want to mention in the meantime as well is we're going to be watching pretty closely how the 10-year reacts. So here is the 10-year yield. This has been actually building some higher lows since it flushed down below this 2.6 briefly for about a day or two. It's been building these higher lows. So this is the 10-year yield. Now, why this is important is because if the market is expecting the Fed to be more aggressive in terms of raising rates, and maybe that this pivot thought that we kind of essentially we're seeing by this pretty big move to the downside in the 10-year in the past, really since mid-June. So ever since that June CPI that came out, that June CPI, by the way, came out, essentially spiked the 10-year, got it up to here. And ever since a couple of days after that, we've just been downtrending on the 10-year, which has been a tailwind for the stock market, for growth stocks, and why you've seen a lot of those stocks bouncing pretty nicely off the bottom. Some stocks have bounced a lot more than others. It depends where you're looking. It depends on the sector. But if this starts to push even higher, right, this is going to be a bit of a headwind. So if this pushes back up, doesn't mean that it has to go to new highs, but if this gets up closer to, let's say, 3%, gets up into this area, it's going to be interesting to see how it reacts there. It's been a spot that's gotten rejected a couple of times, but this could be, a little catalyst to help push stocks lower, at least in the short term. So that's what we're looking at. I think realistically, if the 10-year, and the 10-year has been leading, if the 10-year pushes up over 3.25 and goes to new highs, good chance we haven't seen the lows in the market. If the 10-year does not make a new high, it's possible that we have seen the lows. And the expectation of a pivot may be, a lot more realistic. Or sooner rather than later. So that's what we're looking at across that. Also, here's the dollar, DXY. This has become interesting to watch too. The dollar has been holding this 50-period moving average, this blue line going back, really since the beginning of this year. Very, very strong, but it's starting to break down here. So let's see what it wants to do here today after the CPI reading, if it's going to hold up or whatnot. Let's check out oil. Oil is sub 90 again. So the question is going to be, as we kind of had this little area, right? Is oil going to bounce right here? I think to be honest, it's a very, reasonable idea. I wanted to see oil come down a little bit more. I would love to see it down towards like 85. This volume node also lines up with the prior high back into late last year. If it came down just a touch more, that would be a really good bounce spot, I think. But, oil has been downtrending, which has been very, very helpful to CPI. So that's not a bad thing on the CPI. But with how much oil has come down this month and next month, bigger question is going to be, if that CPI number does not come down that much, it's going to be pretty concerning, right, in terms of the other aspects. And I think that their concern is that the job market's so strong, and because the job market's so strong, it's going to be very, very difficult to get this inflation number down without taking a hit to that job market. So that's kind of been the concern for a lot of people as well. But here we are. Let's see. Let's see. I'm going to go through some of the comments. CPI data will be 1, beat and stocks will rally hard. Core CPI will be a 0.2, which is the miss. I think that's kind of the key. So if we jump back to, let me see if I can pull up I will pull up the last CPI release. And this is going to get us a kind of a look at what happened last time. Let's pull up the PDF. Okay, so give it a second to load up. Okay, here we go. Let me just make sure it's all loaded up. Okay, so we got this blue line. I'll zoom in once we get the data and stuff, the new one and whatever. But essentially, this blue line right here on the top of the chart, this is your top line CPI. So this is the number that everyone's looking at and everyone's going, oh my gosh, 9.1, oh my gosh, right? The headline, this blue line. Let me see if I can get it into frame. There's a little bit better. This red line is all items less food and energy. This is where I think that the focus should honestly be a bit more. So we probably know that this blue line is going to come down because of oil and gas. They've come down. The question is going to be this red line. If this red line gets back up over 6, it's up at the 6%. If this red line gets back up over 6 on the new release, that's honestly concerning, because take out food and energy, that tells you that there's still all the other aspects of the CPI. Now, food and energy, there's a lot of that in there, right? Energy is pretty big in this category. Take that out, still hasn't really come down substantially. This red line getting down to 5, getting down sub 5 would be a really big sigh of relief in my view for the market. But it still hasn't done so. So we're going to see. I would be concerned, or not concerned, but I would be very concerned about chasing a rally here. If we did get a CPI that comes in lower than expectations, be cautious, because let's see what happens. If SPY gets over 417 today, that's going to be a really good sign. If it closes there, great. But let's see if it's a fake out move. That's ultimately the question that I think that will be asked. I also want to look at the current projections for the Fed hike in my banana bread recipe popping up on the screen. That's what I was looking up 2 nights ago. I get Google recommending me all these recipes. Okay, so here's the current target rate, 225 to 250. I know it's small, but it's right here. This is the projections for the September 21st Fed meeting. So we still got over a month until the next Fed meeting. So there's still going to be another CPI that will come out before this. So this is going to change, I'm sure. But as of right now, there's about a 34-35% chance of a 50 basis point hike indicated by this left bar, and about a 65% chance of a 75. Okay, so let's see how this reacts. Obviously, we'll look at the 10-year, we'll look at bonds, we'll look at the market, and then that will give us a pretty big, clue to where this is going to go. But if CPI comes in higher than that 8.7 expectation, very good chance that we see a bigger sway towards that 75, and dare we say we start seeing the chance of 100 basis points coming up into this picture. If that CPI number is way lower, let's say 8.5 or less, then I think that maybe we see a higher chance of a 50, right? That's where these bars will probably swing. We're going to see. We got a few minutes until that CPI comes out. We'll get it to let it come out, give it a second, and then we'll see how the market reacts, and we'll jump into a bunch of stocks, look at Bitcoin, we'll see how everything is shaking out, the VIX, all that stuff once it comes out. The first reaction, let's be careful because generally speaking, there's going to be some volatility on this initial reaction. These releases have all been pretty darn anticipated, right? So we could say that to be at least, right? That's for sure. Red, do you think it's an 8.9 or a 9 CPI? 8.9, 8.8, my assumption. Yeah, I think that's I would be, what was funny too, I saw the White House had their press briefing yesterday or whatever, maybe it was 2 days ago, I forget, whenever, they do it every day, I don't know when they do it. But I saw a tweet yesterday, and they didn't mention, or they mentioned it, but they didn't warn. Last month, they warned in their press briefing the day before CPI, on the Tuesday before, I believe. They came out saying the CPI number is going to be very high. However, we're looking to get oil and gas down, whatever it is, whatever they said. We're doing what we can. They didn't say that this time. So what that tells me is that, maybe they don't know ahead of time these numbers. My assumption is they probably do. Someone probably does know. I'm almost sure of it. I'm assuming this is going to come in closer to the expectation. It should not surprise substantially higher. Could it surprise by, a few tenths? Yeah, sure. But I don't know if it's gonna surprise at like a 9.2. You know what I mean? I think upper 8s around 9, very possible. We're gonna see. If that's the case, to be honest, with how much oil and gas have come down, that will continue. If oil stays low, that will continue. But with how much those have come down, I'd be pretty surprised if we're still up around the 9%. But here we are. We're gonna see what we get at this point. Fed measures inflation by core, mostly food, or excluding food, energy. People have been spending like crazy. Services, rents have still, rents. I can tell you right now, and based on where I am, they're still going. They've come back a little bit, but they're still up there for sure. No mention means a beat. No warning. Beat seems likely, but it's called CP Live for a reason. All right, so we're gonna get this in about, a few seconds here. It should come out. Let's see what we get. I haven't seen it pop through yet, but it should pop through any minute, and then we'll look at the actual data once we get it. All right, so I'll come back to this page. We can get rid of this. This is the June numbers. I'll keep June up. I'm going to come back here and we'll pull up the July CPI once we get it. Hasn't refreshed on the site yet, so I'm sure it's coming soon. And we'll see how the market. I'm not honestly, the market's going to do what the market's going to do. Let's just give it a minute for this all to get digested. Okay, here we go. Increase of 8.5. So look at that. Core CPI up 5.9. So those both have come down. Let's see how the market's reacting to that. SPY 460. SPY hit 418. We hit on SPY a few minutes ago. Ripped. We absolutely just ripped. Some alerts are going off. I'm getting, price alerts ripping left and right. Let's see what I got. Let me go back to TradingView and check out TradingView. I'll put up on TradingView to see what alert. DXY crossed below the 50 SMA. So DXY is coming down. So there's that alert. Let me go back to the 5-minute chart on SPY on here. Look at that move. 417.22 right now on SPY. This is at the top of the range right now. So it's about to look like it wants to break out of this range. We'll see if it holds up. Let's see if we can get the actual numbers here and get the official chart. Here it is. Here we go. PDF. So 8.5. 8.5 is the number. Jumping on through, why is this chart doesn't seem like it's this PDF is not adjusted yet for whatever reason. So they had the numbers, but let me see if I can go back and pull it up. CPI. It said it was updated, but then I pulled the PDF up, and the PDF did not actually log into the correct data. So CPI comes in at 8.5%. The estimate was 8.7. That was what we got. The estimate was, which is seen by the market right now as a very good thing. Let's see if I can pull this up now. Yeah, there it is. Here it is. So let's see. I know I'm blocking some of it, but we'll kind of go little by little. So all items comes in 8.5. 8.5% was the number. Food. So we're looking at these like month to month increases. Food 1.1%. Let's see where we got some big downs. So big down in energy. Energy down 4.6 in July. Energy looks like fuel. Oil was down 11%. We had gas services down 3.6. We had some negatives down here. Used cars and trucks. This market has come back a bit too. Down 0.4%. Apparel came down 0.1%, and then transportation services down 0.5%. You kind of expected that because of the gas and situation, oil and gas and energy prices coming in. So you kind of expected that, to say the least. So that's the situation right now across the top line CPI numbers coming in. Let's see if I can pull up the PDF. I'd like the PDF a little bit better. Let's see if they updated the PDF. Come on, let's see. Yeah, here we go. So here's the bit more visual, or the core essentially stayed the same. So here's the concern, right? Market likes the top line CPI number. Let's just kind of look at this really quick. Market likes the top line CPI number. Great, cool. But this core, I believe, has stayed the same. So core hasn't changed, actually. If you look at the core CPI, so the red line is coming in, it's flatlining. So if you're the Fed, what you really want to see is, these lines are spread. There's obviously a much bigger move to the upside as of late because of oil and gas, the past since like April, May, June, right? Great. Coming down, gas is coming down, oil is coming down, cool. But you really still want to see this red line. This red line, you want to see that thing coming down towards 5 and going lower. It's still holding up, which is definitely concerning, big picture, but market's rallying up that top line CPI number. It's at SPY is at 418 now, almost 419. Blowout right here. Look at this 3-month chart on SPY. It rallied off of this. The difference we had this time really was that the day before CPI, we did not break this consolidation, which we did two CPIs ago back in June. And what we saw here was just higher lows, and higher lows. So now I think that this is where you're going to have a lot of questions in the market, because if this move holds up, right, we still have a long way to go in terms of getting this number down. This number still got to come down a lot more, right? But I think the market is starting to see that, hey, this is turning. The tide is starting to shift a bit, and that we could be seeing, a pivot coming at some point if this trend were to continue. That's what it seems like the market's saying. Let's see what we got in terms of the 10-year. Do I necessarily believe that we're like really close to a pivot? I don't know if I believe we're super close, because let's be honest, that still needs to come down a lot more. So the 10 years coming in, I won't say it's crashing, but it's down 3.5%. 10 years at 2.68. The lows of the past couple of weeks were 2.51 on the 10 year. So let's see how this ends up holding up. DXY, this is the dollar index. This is also coming down below that 50-period moving average. So that is coming down. So that's kind of the expectation that you're looking at, right? We get finally a beat on CPI in terms of to the downside, in terms of expectations. Finally, markets seem like, hey, we like it. So again, 8.5 was the top line CPI number. It came in below expectations, so which is technically a good thing, right? 8.7 was the expectation. We got an 8.5. 8.6 was the number we got in May. So we're just below May's, I guess, increase, but not down to what we saw in April. So here we are. We've seen this happen a couple times. Let's see what the current expectations for the next Fed meeting in terms of rate hikes. This might take a minute to adjust to. Let's see how this loads. I'm assuming this is going to start to shift in the next whenever this refreshes. We're going to see a much bigger shift towards a 50 basis point hike. I'm seeing. Let's see. Jump through here. Let me go back through some of the news headlines that are coming through. What do we got here? Treasury yields are falling. Yes, we know that. Fed fund futures rise after CPI report. Traders reduce bets on U.S. interest rate hikes ahead. So Fed is now seen raising rates by 50 basis points in September based on the futures pricing versus 75 based on the CPI. So here we are. I mean, a lot of you guys were kind of saying the same thing, that this is we're gonna rally off of a good CPI. But when you take a step back and look a little bit deeper, that core number hasn't really changed. I mean, really since May, we're actually pretty much flat 3 months in a row. That core hasn't come down, right? And that's the Fed needs that's what we need to come down substantially. This top line right here is going to be pretty volatile based on oil and based on commodities and based on a lot of that stuff. So this is going to come down, obviously, if oil stays down and whatever. But this red line needs to come down. If you want to get a bigger dent, this needs to come down in the coming months. So market is saying, hey, it will. And I think it will at some point. And then the reality is that this stuff tends to roll over pretty fast. When we start to turn on inflation, when that tide turns, it tends to roll over pretty quickly. And so you're starting to see people talking a lot more about risks of deflation going forward and stuff like that, which is very, very potentially real into the end of this year, into next year. That's going to be probably something you're going to see a lot of, especially if the Fed was to come out and continue to raise at 75 again, let's say next hike. We'll see. But I think that the key is going to be what happens realistically for the Fed. What happens in September? So great, these numbers have come, top line came down, but if we get to September and the data for August and this red line, this core line, right, is still up at 5.9, let's say it's still up at 6-ish, 5.96, and this red line flatlines for like 4 months in a row, that's not going to, I mean, my thought is they're still going to want to be aggressive in terms of raising because they haven't necessarily got what they wanted yet. But we have to understand that those hikes don't do anything tomorrow. They take time to really, really impact the economy. So it takes time for us all to play out. So realistically, maybe the market's thinking to themselves, okay, well, since it takes time, Fed's got this under control. They've kind of done what they had to do. And now they can kind of back off or slow down because all of what they've done the past couple of months is going to really start impacting things and dropping things. And they're not going to have to do too much more. Maybe that's what the market's pricing in or expecting. So there's that. Let's take a look at Bitcoin. What's Bitcoin doing? Bitcoin is actually, believe it or not really moving off of this market rally. Interestingly enough, Bitcoin's sitting at 23,000, just north of 23,000. Actually pulled back a touch off the CPI. Believe it or not. Jeez. Interesting. Let's see what gold and silver have done. Gold spiking up. Gold's spiking back over 1,800 on gold right now. Silver also looks like it's probably spiking too. Silver's back up over 20.5 roughly, or 20.7 now. Big picture charts on these guys. Let's see what they look like. Yeah, really nice rally off of silver from the mid to low 18 so far. Gold wise, let's see what gold's rally looks like. Gold, yeah, I mean, gold came down essentially to, if you look at it on the chart, it came down into this little range we had right here. And this is like some support levels we saw from the past like year or so, a little over a year actually. And it bounced really nicely at that 16.8. 1,680. Bounced very, very nice. Now it's back up to over 18. So very nice rally back on gold. It's still coming up right now to a very key spot. 1,800 is a really key spot, pretty much down to the trend line crack once it got below this. So if gold can get back up substantially over 18 and start to hold that would be a pretty strong move on gold. Pretty strong move, to say the least there. So, geez. Was going to do a spy strangle yesterday. I took a nap instead. Yeah, it's funny. I mean, it is funny. It's going to be a risk on day. Yeah, I'm curious to see. Let's see what IWM is up about 1.8% now so far in pre-market. We're back up into some of the highs. So IWM still not up over the highs of a couple of days ago. 195, 194 to 195 is going to be key. It's at 193. I'm thinking out loud, I guess, at this point in time, because we kind of digested it. It's been 10 minutes. We'll kind of cover the CPI. We'll go back to that in a few minutes, just for those who are jumping in who are new. But I mean, let's start looking across the board here. So IWM is going to be up about 1.75%. We still got about 50 minutes until the market opens. So a lot could change, right, in the next hour, essentially. But we are going to gap up pretty high on the markets. I'm going to be very interested to see if we immediately sell off on the open and start to potentially fill this gap back down, or if we are going to gap and go. That's the question for today. Is it going to be a gap and go day, or are we about to backfill? So SPY right now is at 418.45 roughly. The highs of this week were up here at 417. I'm just going to draw a horizontal line there just so we have it logged in. The highs right here were at 417.63. So if SPY ends up opening above that, that's cool. I think we want to see the reality is you want to see it close. You want to see it close above this. So SPY can do whatever it wants to do, right? But really what it comes down to is the end of the day. Are we still up here, or did we backfill this gap? And it could be an opportunity for a fake out potentially. We'll see. We shall see, but it seems like market likes what it sees right now. We always want to be thinking both ways. I mean, if you look at this very strong move, you can't deny that. I think if you look at the bigger picture, SPY is about $10 off, a little bit more than $10 where it's at now, but it's about $10 away from this area. And I would say that I could probably do a better, yeah, right there. So this is going to be where SPY is at right now, is essentially like right here. We still need to go about $10, $12 to get up into this trend line touch. Now, the NASDAQ, I believe, or QQQ hit that and rejected, and that may be breaking out this week, depending upon how today looks. QQQ in pre-market's up 2.5%. 2.5% on QQQ. Look at this. Ripping face. Still, though, QQQ not to the highs of the week. So the highs of this week were at 326.45, and QQQ right now is about 324.90-ish in pre-market so far. Let's see a couple stocks. Tesla. How's Tesla reacting off of this? Couple large caps. Tesla, trying to get back up to $900. Not really there yet, but trying to get back up to $900. It's at $892 in pre-market. Apple is eclipsing the highs. Apple was strong yesterday, so I'm not surprised. Apple is now eclipsing the highs of Monday, which were about just shy of 168. Apple's now over 168 in pre-market. NVIDIA, this is a stock that took a massive dump off earnings, guidance, and whatnot. Is up 3%, a little over 3% here in pre-market, up to 176.35. It's essentially up $6 off of where it closed yesterday. Amazon, see how Amazon's reacting. Amazon not to the highs of Monday, but it's up there. It's at 142. The highs of Monday were we're just over 144. So Amazon still got $2 more to go to hit those new highs. So depending upon where you look, it's some stocks have or are going to be eclipsing those highs of the week. Some stocks are just shy. And I think if we get that gap and go, they'll break them. If we don't get the gap and go, if we get the gap up and then immediately a sell off at the open, we'll see. It could be an opportunity to sell into big money wise and whatnot, because you get a CPI that comes in better for the first time in a while and people are feeling pretty good, but it's still pretty high, and core CPI is still pretty high. It could be an opportunity for a little fake out rally and a sell off. We'll see. I mean, you got to think both ways. You got to understand what's happening. Obviously, the market's going to tell us. The price action will tell us pretty quickly, I'm assuming, once we open up. Here's ARK. ARK is back over 50. ARK's high on Monday was up here towards 52.45. ARK is still about $2.5 away from that. XBI, the biotech ETF we like to look at, very, very strong last week. And then Monday, this is up to 93.40. It's up 3% in pre-market. So essentially gaining back what it lost yesterday. A lot of these stocks have, some of these stocks took a pretty big hit yesterday. ARK was one of them. So ARK essentially was down 5.5% yesterday. Today it's up in pre-market 4.5%. So it's going to get in there. A lot of these stocks that took a big hit yesterday, some of the risk-on trades are going to be pretty much getting back what they lost. The stocks that were less risk-on, like the Apples, ones that have been holding up a lot better, for example, Apple, which has been holding up a lot better, is potentially going to make a new high compared to Monday. So we'll see. TQQ, massive spike. Yes, for sure, it definitely did. Yes, it did. Solar stocks, I think those are going to be pretty good in the coming weeks and months. The problem that we have, and we'll see, maybe we just go. I mean, I find it hard to believe that in the next 3 to 6 weeks, let's just say, that we're going to just continue to go straight up. We could for the next couple of days, but I think that 430 on SPY is pretty key. We'll see what happens. Today will be very, very telling, I'm assuming, based on how we end up closing today, because the open is the open, but the close is much more telling in my opinion. We can gap up. You can gap up all you want, but if you hold that It's a lot more substantial than if you give it right back. So jumping back in here, here's the 10 years. The 10-year plummets down to 2.67. Now it's at 2.7. So the 10 years come back a bit, but it's still down about 3% today. So we'll see what this wants to do here. But the 10-year has been very, very telling. DXY, look at this. DXY making a new low compared to the low from a few days back, August 2nd. DXY, it looks like it's coming in. And this essentially will come down. You'd imagine this is going to come down if that inflation number starts to come down. So let's see if this continues to hold up today below. I mean, 105 is a spot. You get DXY under 105. It's a really good look for for those who are short the dollar. I guess it's a good look. VIX, the VIX is up in pre-market. So the VIX is still technically holding on this trend that we have right here. It'll maybe populate in a second. I don't know why it's not loading, but you can kind of see these higher lows. These higher lows are all building here on the VIX. So for now, the VIX is up. Yeah, there's the trend, of course. I was drawing the lines in as it popped up. It's holding up for now. If we get a gap up, in which we're gapping up, right? We're making a move in the pre-market hours, essentially before the regular open, which a lot of stuff happens during these hours. But for big picture charts, daily charts, weekly charts, this is going to be a gap. Well, daily charts, this is going to be a gap up. The VIX is holding up, which is an interesting thought too, right? Because you'd think the market rallying, the CPI is a sigh of relief, the VIX should kind of fall off. We're going to find out today. But if the VIX ends up dumping, that will be very, very telling. Let me jump back over to Webull and see. So SPY 419 now just touching in the pre-market now. So it's continuing to push. The VIX, we'll see what UVXY is. A lot's looking like too. But we'll get a move there. So yeah, the UVXY is coming down. So the VIX is coming down. So the VIX should be coming down. Bitcoin finally just popped. So Bitcoin finally just took a nice little bounce right here. Here's BTC. Let's see if we can pull it up. So we're looking at Bitcoin a few minutes ago, and it was like, it didn't really move. And then it ripped. So it actually was coming down a bit, and then it rips. Now Bitcoin's at it's 23.6 right now. So it's not 24, it's 23.6 on BTC. Jeez, IWM moving nice. Well, let's look at IWM. I mean, to be honest, I'm not very interested in playing. We'll see if it's a gap and go day. I guess maybe there could be really strong trends. I'm not very interested in playing along right off the open or anywhere near the open right now. Based on even though we're strong, IWM is going to be up 2%, very strong. Even though we're strong for now, I'm still not very interested in necessarily playing it to the long side. Let's see if I can pull up how my Mara is going to look. Yeah, Mara's not going to be good. I had that short that we added yesterday. I guess I could have waited till CPI, but I want to see if Mara doesn't break that 1575. As long as it doesn't, I'll stay in. If it does, I'm out. So we'll do that live if it does rip through. But yeah, you can't deny this crazy strength here so far in pre-market. 2% on IWM. This is the Russell small caps. S&P is approaching 2%. It's getting rejected here at 419. Let's look at the big picture on this chart, though, too. So let's see, where does it put us? 420. Yeah, I was kind of expecting up to 430 is going to be the next spot. If you're not looking at the big picture trend line and you're looking at a horizontal line, 430 is going to be key. 430 was the next spot right here. So that's going to be kind of our next spot to watch on the S&P. 430. And how do we react there? So depending upon how this day or this move holds up today, if it does hold up, if it doesn't hold up, we'll see. That will kind of change up my thoughts on what I want to probably position into. I do still like hedges versus this 430 area. It's been a pretty substantial rally. I'm not saying I've been one that was like, hey, when sentiment gets so bearish like it did back down here, I mean, really, it was pretty bearish this whole way down, right? You can set up for some pretty substantial rallies off of that. We got a pretty big move. Now, how much without any substantial pullback, how much more does this have? I think a healthier move to the upside, a true bottom to be put in, and a much healthier move to the upside, I would want to see maybe SPY getting up to here, pulling back to here, and then potentially going from there. That's what I would want to see. I mean, that's what you want to see. That never happens. It's always in the market, right? You never get what you want, it seems like. You always got to adapt to on the fly to what's going on. But I think realistically, a pullback, especially now if we're going to gap up and go today and we start ripping even higher, a healthy pullback would be a really good pullback, in my opinion, to start looking at certain sectors, certain stocks that you want to start picking up if you have missed the opportunities and whatever. So we'll see. But maybe this is a huge fake out, and the bears get the best of everyone who starts chasing. But be careful chasing today. Like I've said, I think that there could be a better opportunity, for dip buys. And generally speaking, if you're patient, you'll tend to get it. So we'll see if this is bottom is in, if that's what we're getting out of here, bottom's in, all that stuff. Then here we go. Let's see. Wish it was released at 9:30. Yeah, waiting for the first 30 minutes. I think so. Nothing against well, we're gonna see what happens. But I would 100% wait for the first 30 minutes. I mean, you could see we had a pretty big gap up. Essentially, we closed. I'll draw the line in. We closed yesterday, actually I can pull it up. Where SPY's closed. SPY's previous close was 411.35, which is I'll draw the line in. It's right here. So that is a massive gap up, about $7, roughly a little over $7. If you had this is a big if you had a situation, let's just say this is a fake out. Let's say it was a fake out move, and hey, market rallies off CPI, people feeling good, get people excited again, and then we sell off into this. If you had a close, let's just say anywhere close, in my opinion, anywhere close to this open, if we end up coming down and closing the day under 413, under 412, let's say, that is not a good look. That is, in my view, that will not be a good look. So that's a big if by the end of the day. But if that's what happens, that will not be good. Then of course, let's get support on that. What does the 10-year do? What does what does DXY do? I think DXY is just unraveling here. It's down below 105 now, or it's at 105 right now. This is unraveling pretty fast. But what does the 10-year do? What does oil do? Let's see where everything kind of shakes out come the end of this day, and we're gonna have a better full picture. The 10-year. Here's what's funny about the 10-year. If you broaden this out on this 10-year chart, let me see if I can pull the past 3 months up. This 10-year has had these weird fake out moves. It seems like every time on these CPI readings where we get the initial reaction off the 10-year, and then throughout the next day or two, it completely reverses course and goes the other way. So the 10-year initially goes from 2.8 down to sub 2.7. Now it's back at 2.717, so almost 2.72. So if the 10-year were to, let's say, rally back the entire day and finish today back up over 2.8, that's probably not a good look. That's probably telling us, hey, the Fed is still going to be coming in hot. And yeah, we got an inflation number that comes down month to month. Great. But bigger picture, there's still more work to be done. So that's what the 10-year will potentially be telling us. We're going to see. If yields pop back up. And you can look at other things, not just the 10-year, but this is just a great proxy for really what the Fed, for rates and what the Fed's going to be doing. And this has been, the bond market has been an amazing tool to watch, or amazing thing to watch over the past 6 months, because it has really, and I think really it's truly been, front running this market. Bonds reversing to the downside has been a great tailwind, and then the market has followed suit, shortly after. And if this starts to rally higher, not going to be, it's not going to be a good look for stocks in the next couple of weeks. I'm going to, based off the past 6 months, yeah, that's what we've been seeing. So it's always a great tool. Now, if this comes down all day today and we start going like this by the end of the week, I mean, I think the market might just say, screw it, let's keep going. It's very possible, especially tech and growth. Let's see. I quit buying SPY puts a couple weeks ago. Can't play options without any pullbacks at the open. Trying to force the short. I think a lot of people are trying to force the short trade for sure. Yeah, MMAT wrecked you. Let's see what this thing. I mean, there's been plenty of small caps I've gotten rocked by. Its chart doesn't look. It's just trying to bottom out here in the upper around 90-ish metamaterials. It's trying to bottom around 90. We'll see. I mean, today's move can be very, very telling, because if this move ends up holding up and we end up, gapping, pull the old gap and go on the market, yeah, this is going to be an interesting look. It's going to be very interesting to see how small caps start to do in the next couple, weeks and months. I said I like small caps to the end of the year, really, and maybe into next year too. there's so many stocks like metamaterials that are down so low. It doesn't mean that I like that from a fundamental standpoint. This is like the next best thing, but these stocks can rally, 100, 200% off these lows, on a spike and provide amazing opportunities for swings and stuff. The problem with small caps is that you have to be dialed into the macro. And when the macro shifts, for example, right now, we're kind of getting that shift. Then that's when you can make a lot of money in small cap land. So here's SPY. It's at 418.35. It hit 419 briefly or just shy of 419 a few minutes back. And it's back to 418.35. We'll see what it wants to open up at. But yeah, it's going to be very interesting to watch how today plays out. Got a short on CEI a long time ago. Yep. Shorts have to cover markets down. I think that this squeeze out could be, we'll see. I think we can get to, the concern that I have with that is that doesn't mean that we have to go to, new highs like immediately, right? But I think no one is expecting that. And I seriously think that we can get there faster than a lot of people realize. I think we really can, believe it or not. Zach Morris pump at $3. Yeah, on CEI. No, that was a stock that realistically burned a lot of people. I mean, I did well on CEI, long time ago, before it became what it became like a year ago, whatever it was. And then I remember back at the time, I missed the opportunity to buy it, I'm pretty sure. And then I watched that thing go like 1,000% off of where I was like looking at it, but I didn't buy it, and I watched it go 1,000%. It is what it is. Okay, so SPY. 418 in pre-market right now. It's pulling back a little bit, whatever. I mean, the key is going to be that let's see what it does. If it opens up and it holds over the highs of Monday, that will be your first area to watch. So 417.50 is going to be kind of a key spot. If it can't hold that, maybe it comes down to VWAP, wherever that VWAP is by the open. Another key spot is going to be up here towards like 415.50. But yeah, this is the big picture on SPY. I'll zoom out. Big picture, here's the range. So we're up, pretty much just over the top of this purple box right now in pre-market, as we call it, a gap up. The question of the day is: it is a gap and go, or are we about to backfill this gap and then fake a lot of people out? That is the question for today. A lot of shorts covering if we break 420. I think so. I think that today could be one of those days where you just get a lot of people who are like, "Yep, screw it. I'm covering this thing. I'm out. And they just say screw it, and we end up ripping face, or with that then provides potential opportunity to reposition, to play the other side of things and whatever. So we'll see. I'm curious what I want to do on my September hedges. I have a bunch of hedges, some puts and stuff out to September 16th timeframe. I'm curious if I want to get rid of those, or if I want to roll them, or I want to change the strike prices. I'll see how today goes. I'm not going to make a move off of one day. You want to see a couple days. I would like to see this thing closing up over 420, and then if we do, okay, I guess maybe I can get out of those things and look to reposition myself or trim out of some certain things that I want to trim out of, and then hold some hedges and then maybe reposition into some more hedges if we get up towards 430. That's what I want to see. And the way that I see it is that I really want to buy the dip. I really want to buy this market because I think that we can get a much bigger move momentum wise than people realize in the next couple of months. Whether it's healthy or not, I don't really care. Like, it doesn't matter to me. It doesn't, we'll see what happens. Like, that's big picture. I'm talking next 6 to 12 months, right? Is where the opportunity in my view could be. But my problem is that I'm not buying this thing on the breakout. Like, you're not going to see me buying it up here. Like, while it hasn't provided a pullback, I understand there was opportunity, and I was buying, a lot of the way down anyway. But there's opportunity. There's always an opportunity. But I mean, I'm much more of that pullback dip buyer than someone to chase this thing on the breakout. And I'm just not going to see me do it. So I need to get what I want in terms of a setup for me to start buying the dip again. Because I did sell a lot of my longs. I have started to get into some small caps, or I've added in some small caps and stuff. But I did sell a decent amount of the longs, last week, and it really was last week. A lot of it was last week. Once we got up, especially on XBI and so forth. So we'll see. We will see what today provides. Real estate the way. Instead of losing 50% in 2022, I could have made 100%. Well, real estate tends to lag the stock market. So, yeah, I mean, that right shoulder form would be amazing. I mean, that's if you're talking about the inverse Head and Shoulders, I mean, essentially, here's your left, here's your head. I would love something in this area. I would be starting to, if we fell back under 400, depending upon, let's say, where the 10 years at and where, oil, depending upon what the Fed's saying a little bit, obviously the Fed could, say what they want to say and then do something else. But depending upon how we've been seeing the trends and trajectory of a lot of different things this past couple of months, I think a sub 400 buy on SPY is very, very juicy. Very juicy for me. So that's what I want. That's what I want in a perfect world. That's what I want. But we know the world's never perfect, right? So this zone, I mean, hey, we could come lower. I mean, I would love it even down here, but I would start buying substantially in this zone, And when I say buying substantially, it would be shares of small caps, and it would most likely be on any option plays. I'm going to be looking to March. I'm not going, shorter than March timeframe. You can make a lot more money if let's say, we came down in September and then bounced here and did this, and then, we bounced by, November, December, we're back up to breaking up over 430. Let's say we're up here. Yeah, you'll make a lot more money if you had January expirations. I don't care. I'm going to buy March. That's what I want to do. But we'll see if we get it. We need to get what I want for me to do that. So for me to be, relatively heavy, I guess, in that any positions. So we'll see. Let's see. If we hold over this 417.50, going to be pretty strong for SPY. If we start to fall back below that, be careful because there's a pretty big gap up. We could backfill some of it. We could backfill all of it. We could backfill half of it. Just be careful upon chasing at the open. The question, we totally can get that short squeeze continuing out today, but we'll see. I don't know how much of that. I think a lot of people were trying to short the past couple weeks anyway. A lot have kind of moved on, and especially with CPI, people maybe had shorts on for this. Great, sure, whatever. But I think there's also a lot of people who realistically were just staying away from that, and we're like, I'm not going to mess with that. I'm not going to guess. Inflation could have another run with labor market. I mean, I think what's important to look at here is this all items less food and energy. I mean, look at this red line. It's flatlining, So that is just not even have another run. I mean, if oil and stuff bounces back, that's going to be pretty bad for the top line number. But if that core number doesn't come down, I don't think it really matters too much. If that core doesn't come down, I mean, the Fed's still got to keep pushing into what they've been saying they're going to keep pushing, so they're going to probably keep pushing into that. That's my assumption. By the way, look at this. So the 10 years actually, it dumped really quick off that news, off the CPI, but it has been, rallying back. It's back here to 2.735, believe it or not. So that's interesting. 2.74 now on the 10 year. So this is interesting. We'll see what the 10 year does today, but it's very possible that this ends up pulling that fake out, which we've seen similar situations happen the past couple CPIs where it rips up. Oh my, the 10 year goes straight up and then it starts to fall right back off. I believe, I forget when. I think it was pretty much a big one was off of the June CPI, and we've seen it on a smaller scale. Also in the past couple, I think last CPI too, depending upon where we were looking. I guess. Let's see. I'm trying to zoom out to my. We're probably not. Oh, well, let's check on Bitcoin. How's Bitcoin doing? Bitcoin is pushing 24K now. It actually just touched it, got above 24K, got rejected. The highs of August 8th, was August 8th, so this week. So Monday's highs are 24.4. Why I have a line? Let's see. Why do I have a line there? Oh yeah, here's Bitcoin's little wedge. Let me zoom in a little better on this thing. So Bitcoin's wedge right now, and we kind of looked like we were trying to break below that wedge earlier today on the initial reaction off CPI. It kind of had a fake out move. So this right here was looking like a breakdown, and if Bitcoin falls below like 22.5, yep, we're breaking that wedge to the downside. But if we break out over like 24.5 here, and hold above this area, we can get a spike, a wick, and then fall back off. If we hold above this 24.5, very good shot, a very good look, at least chart-wise, to make a run towards that 30K. Gaps, you got support, essentially the lows of this prior consolidation up in here. So this is where I'd be looking at. Volume node up here towards 30K. So I would look for Bitcoin up to about 28, 29K if it can break out of this little wedge that we got going on. So we'll see if we get that, but that's the look. And for those who are, I'm not a Bitcoin guy. I don't follow Bitcoin very, very much. I do have some, and I do have some recurring buys, very small. My thought is that if Bitcoin falls back under 20K, those recurring buys will increase. If Bitcoin runs from here, the recurring buys will stay the same. Or if not, if it runs substantially higher, I'll just stop buying it, and I'll just, maybe look to trim some. That's how I'm playing Bitcoin. Not very, and big picture, yeah, sure, but I'm not really very interested in following the day-to-day price action all the time. Big picture is what I'm more focused on. Okay, so here's XBI. Let's look at this XBI chart. 2.5%. So it popped a little higher. It's fallen a little bit. ARK. Let's see what ARK is doing. ARK is up 50. It's still at $50. Amazon. Let's see what Amazon's up to. Amazon's up 3% in pre-market. Nvidia is 3.5% almost. Apple's going to be very interesting to watch. Apple's now just back below the highs that it was on Monday. So a question of the day is going to be: Is this open going to be the we're going to look at this after the fact and go, okay, like it was, killer trade one of the two directions, right? Is this going to be the fade the open, or are we going to gap and go? That is today's question. What's going on? Kyle's in the house. Yeah, we got this. We got the CPI, man. I mean, of course, we got to be streaming for CPI. So it came in at 8.5. Core really didn't move, but top line headline number did come down. Pretty much, kind of honestly what we were expecting. I think that they were expecting maybe the core to actually bump up a touch. It stayed the same. Whatever. And then the top line number came in below expectations slightly for the first time in a while, right? The good thing about this, though, I think, the scary thing, I think, to me, is that obviously, like, oil came down a lot. Let's see what happens next month. I think it's going to be really key. The one-off months, like, it's tough to kind of get a bigger picture view. But if oil and gas continue to come down, and let's see where oil and gas are by the end of this next month and what these numbers look like come September. But if that CPI number, that top line number comes down, let's say below 8, like then we haven't been below the 8s since February. So that would be a really good sign. But we got to get out of the 8s. And really, I think for a bigger picture, I am surprised by this rally. Again, am I really that surprised? No, but I kind of am surprised in general that the market's even up here this fast without any pullbacks to begin with. I'm kind of surprised that it's up this high. And if it holds up this high, I'm pretty surprised. But what it seems like the market is looking out so much further ahead than maybe what we're used to. And everyone's trying to front run and pre-run all of this potential good news that could come next year on rate cuts or a pause or this or that. And it seems like we've gotten very, very far ahead of all this stuff, which, hasn't been the case in the past. That's why everyone who's looking at the market and saying, yeah, short. Well, yeah, if you go back, and look at the past history, yeah, like we haven't seen, like, yes, when the Fed pauses and the Fed reverses course, like that's generally a good buy, like all these things, we're not even close to that, but we're already bouncing massively off the lows. And it's like, how is this possible? How does this make any sense? Well, I mean, I think it's because the market's pricing in so much further in the future than maybe what we were used to watching and through history. So I think that's part of it. By the way, look at this. Notable move right now on the 10-year. The 10-year is almost back to flat. So the 10-year has essentially dumped and then it gained back all of what it lost on the 10-year yields, which is if this, again, like we said, if this gets back over 2.8 today and it stays very, very strong, you gotta watch this because this is very telling. Now, it doesn't necessarily mean that the market needs to fall back off today. But if the 10-year rallies back up, let's just look at the 10 years yearly chart. If we get back up to 2.9, getting up towards there, it's not from a big picture growth market rally perspective based on what we have literally seen from the bond market the past, 6 to 12 months. This would mean, or this would be a cause for, something to think about on concerning from buying this rally right now. I think dip buys from here, substantial dip buys from here, I think are pretty good buys. Risk reward's so much better than chasing the rally. But we'll see what the 10-year does today. It's been rallying right back. It's bouncing right back from where it was. Or for, literally just 20 minutes ago, this thing was down at 2.67. Now it's at 2.75. So trade all the miners. Own no BTC, 23K. BITO would be nice if you want an ETF version. Market wants any excuse to exit bear market. I've never seen such impatience. That's what it seems like. I mean, it's wild to think because when people say, oh, like you look back, oh, you're an idiot for buying the dip there when we were going down. You're an idiot for shorting it now. Now you're an idiot for shorting it. Now it's like, relax. We haven't seen this. We have literally like this. When everyone says like this time's different, right? Like it legitimately is. Like every situation is unique. So here we are. And does anyone have any clue what the heck's gonna happen? Realistically, no. I think we can all have our speculations. We can have what we want. We can have like, okay, like I want, like for me, like I want to buy a dip. I sold a lot of stuff. I had some hedges on because I think that just looking at the overall market. Now I bought hedges not for next week, but for next month. So I have time. Looking at the market, I'm like, this is up so much so fast. Macroeconomics aside, right? Just from a technical view, a healthy move to the upside would offer a pullback. Now, do we need to pull back down to new lows and go down to 375? No. We don't have to. We could. We don't have to. But a pullback to 400 or sub 400 on SPY, get people shaken again, get people a little bit concerned, get people scared about buying the dip. That's when I think we can see a lot better risk reward. Let's look at, I'm very curious to see how this fear and greed sentiment index or indicator ends up shaking out today, because we're at 49. This is where it closed yesterday. I'm curious where it ends up today. But actually yesterday's close is 48. If this market rips, or rallies, I think that we could be, in this greed again, which is again, a great reset from the fear and greed perspective. So, we've gotten a lot of the bearish sentiment has kind of been washed out, and now we're kind of resetting. So by the way, let's look what SPY's doing here. By the way, so far, SPY popped to 419. Now it's at 417.87. So it's pulling back, but it's still above the highs of Monday. Let's see how that holds up. If I had to pick a spot, I'm just thinking out loud, and I'm liking what I'm seeing in terms of the 10-year rallying right back. We'll watch that and be careful. Just, it'll be on the corner. It's actually on my other monitor, and I always like to look at the 10-year. Not that it's a day-to-day, it's not like a day trade indicator, but it's just a big picture. So I always want to have a good feel. Like if I'm going to buy something or short something or go long or this, what's the 10-year been up to? Because it's been a great trend to follow the past 6 months. So always like looking at that. But I think what I personally like off the open, if there was a trade, it's IWM versus the highs of Monday. So short. I think IWM versus this area is interesting. So IWM also, why do I also like that? Not to mention this 194, if you zoom out, I have this blue line right here. This 194 was a prior substantial area of support and resistance over the past 6 months, 4 to 6 months. And we got rejected there on, was that Monday? So I actually like that. Now, see what we get. First 5 minutes, first 10 minutes, I don't really care. And maybe we immediately dump off the open and then the trade never presents because it just starts falling off. And, I'm not really interested in doing that. But if I had a speculative play for today, that's what I would be looking at. That's probably, if I was going to trade the small count right now, that's what I would do. We'll see. We got 15 minutes to go until the open. I'm not in a rush to do anything. I'm not going to force jack because there's no need. We're going to get a lot of answers, really, I think, the first 30 minutes. So we'll see. Let's see. Higher we go. For now, let's see. What recession? Yeah, exactly. That's what it seems like. Yeah, no, I mean, yep. Love the Russell 2000. China, Taiwan could be the next catastrophe. Everyone shrugging it off. I mean, who knows? It's possible. And it seems like, I am surprised at how it's been shrugged off, like, substantially. The thing that's funny, though, is that it's being shrugged off because we're ripping. Guess what? If we start to fall back off, guess what you're going to start hearing more of? China. They're going to start freaking out. Every piece of potential bad press will start to hit that much harder. Those news headlines might start to move the markets once we start to see a little bit more fear take hold. Now, I'm telling you, that's what's going to happen. And maybe we just rip straight up. I don't know. But if we start to see that, I think almost a guarantee that stuff will start shaking the markets, getting people a little bit nervous. People are like, starting sweating a little bit about this. It's not going to be good. CNBC will be talking about why it's so bad and why it's this and why it's that. I'm sure. Imagine options on a crap coin is crap scam coin. Yeah, that is insane. Just picture like imagine playing like Dogecoin. Imagine having like options on Doge back when it was running like 1,000%. Kind of worry about that. Yeah, I think that's interesting, and people have been shrugging it off, but it's still a valid concern, right? So let's see what we end up getting. So the DXY came down. It's bouncing. So DXY bouncing a little bit. It pretty much held 105. 105 is our next kind of like straw, at least on DXY, that I want to see kind of break down on that 105. But yeah, big picture though. Again, look at the market and stuff. Big picture to me, like what I want to see. We have this inverse head and shoulder potential look here. I want to see it. I think people got a little excited about being bullish and everything. I want to see a gut check. I want to see a little pullback. I want to get people a little bit scared again, at least maybe more than a little bit scared. I would love that. And then once people start telling us that we're going to new lows, that's in my view a sign to start buying again, or we're buying heavier. I've been, it's depending on what you're looking at. Certain small caps charts don't look the same as large caps and stuff. But I sold, some of the large cap or 3x ETFs, but essentially playing off large caps. Some of those holdings I sold a lot of those. So I want to buy them lower and reset is what I want to see. Also, not to mention, we are in one of the, let's look at it right now. Stock market seasonality by month is what you want to look at. There's all different sites. I guess you can look at this site here, Trade Pro Academy. I don't know how vetted they are, but let me see if I can, where is it? There it is. So here it is. Here's the average return by month for like 50-ish years, going back to 2015 from 1964. August and September are seasonally weak months. So kind of pairing up that thought process with some of my hedges is why I like them. And then ideally, in a perfect world, we get a pullback. And I don't care. Like I'm looking at SPY on this thing and saying, if SPY came to 400 again, right? Which isn't that big of a pullback. But if SPY came down to here, right? Even if maybe it ends up going much lower and I make a few bucks on the hedges did their job. And then I can take that cash and start, applying that to dip buys, if we do go lower and whatever is my plan. But that's big picture of what I want to see. We'll see if we get it. Maybe not, hopefully, but we'll see. So SPY actually in pre-market held up above this 1750 area, the highs of earlier this week. So that's going to be a key spot. About 12 minutes to go till market open. So we're going to see. Let me see what we got in small cap land here. Is there any small cap craziness in pre-market right now? The VIX or UEXY is coming down about 5%. So the VIX should be down a good bit today. Bitcoin's over 24K as we speak. Top gainers today, CLWT, it's up 60. Nothing crazy. Car lots is up 30%. Nothing too crazy in terms of the top gainers on the small cap side of things. Nothing too crazy. Microsoft's up 2.5% in pre-market. So a lot of stuff, a lot of large caps up, 1, 2, 3% pre-market, depending upon, how volatile the stock is and whatnot. So that is the deal. But I'm been watching TradingView here pretty much for when the market opens and all that stuff. I just like the charting features a little better. A lot of people have to know that the gas and oil going down is 100% not because of midterms coming up, and that after November likelihood of gas and oil going straight back up is very high. I think it's funny too. I mean, we look at that, and I think that oil, I would maybe today you get the opportunity. Let's see. Well, no, not today. I guess you would see if the market was down today, you would have got the opportunity. But oil at like 85, pretty good risk reward for a long. That's what I think. It's at 90 now, so here's oil. It could do whatever. It could obviously, go up from here, but I would have liked it down here towards this 85, even lower than that. Just below 85 would have been, in my view, a really nice spot to go long on oil, potentially for a bounce. Potentially, a punch down to 400 would be a healthy. I think so. I think 100% on SPY would be healthy, but market doesn't really care what you think, right? So it doesn't really matter, I guess. Here are the Qs. Here's QQQ. It's up about 2%. IWM is up about 1.7. IWM, I really think that a short versus Monday's highs could be the play today, and a pullback to at least, 192 could be in the cards if we got a pullback day. Or if today's a gap and go, then all bets are off. We break over Monday's highs, this thing might just go to like $200 this week, on IWM. So that's the pick your spot, I guess. You could play it both ways and just wait and see how it handles it, see how it reacts. Give it a minute or two. Maybe we open up, it pops up to like 194.50, 195, pulls back, kind of chops around a bit, builds a lower high, and then maybe that's an opportunity to go short, somewhere in here. Versus today's highs, like that could be a better trade, but let it present itself after 10, 15, 20, 30 minutes. It really ideally would be what you want to see. The way you missed it is that if we just open up and immediately sell off, which is possible, but we'll see. Punch down to 400. Best time to buy. Oh, no one knew about this move. Yeah, 10 minutes left. Yeah, portfolio gets big spike from from longs. XBI, what's XBI up to in pre-market? 93.30-ish, 2.81% in the pre-market for now. All-time high for SPY, yeah. That's funny. SPY, I mean, we joked about this, like, well, what was the math? If we did the math from the lows, what is that? What does it move? Let's see. From 362 to hitting highs would be about a 32% rally. We've done so far almost like half. We've done about 14. So the all-time, actually no more than that. Pre-market now we're about 15, 16%. So from here, if you do the math from now, let's see what the math is here. From where we are right now, all-time highs is only about, it's about another 15%. So you did about half of that off the lows. For now, believe it or not, it's hilarious, given how bearish sentiment was just 2 months ago. If he dyes his hair. Where are those trading $100,000 videos? They're up every Saturday. They are up every single Saturday. You guys can see the whole, go back 2 years almost is what you can see. They have been posted every single Saturday. I show the Weeble portfolio. Now we got the Robin in there. We got the small account in there. We toss it all in. It's all in there. I like how XBI moves really volatile. It's either up or no. It is. I mean, a lot of it plays off of. It's the risk on play. So I mean, right now, if the 10-year was to flush back off, and the 10-year was to go to like 2.5, right? Whatever it was. I mean, XBI probably rallies substantially past 95 and goes up to $100. And there's room. It has a lot of room. I think it can go a lot more, but I don't want to buy it up here. I mean, from what I have some left, but I don't want to buy it up here. I want to buy it lower. Dye the hair hot pink. Definitely not. Definitely not something I really want to do. Let's see. Nvidia's getting back about essentially like a lot of these stocks. ARK, Nvidia. It's funny because Kathy Wood bought Nvidia yesterday. ARK is essentially back up to where it was prior to yesterday's 5% down day. Don't do it. No, definitely not. I definitely don't have any interest in doing that. I don't watch any of those. Like the thing that's funny, people think like, oh, like a lot of people think in the space too that you just like, oh, people just copy the same kind of crap. I legitimately, people don't realize, I legitimately watch almost, if in terms of like what I watch on YouTube, it's like 5% finance related stocks, whatever, and it's like 95% fitness related. I like my entertainment, or what I use YouTube for is like all fitness related or just like entertainment type stuff. I don't actually watch any of that. So I have no idea what's going on with people and whatever these days. I have no idea. And I don't really care, to be honest. Like, it doesn't really matter. It is what it is. People can do whatever they want to do. But whatever. I just do my thing. That's it. ARK kind of buys everything. No, yeah, ARK, I mean, I don't know. I think I saw like it was maybe like $60 million of Kathy Wood. She bought NVIDIA yesterday. I think it was yesterday. She bought like $60 million worth or something like that. I think maybe 60 is, maybe I'm off. Maybe it was 160. I don't know. 60 sounds familiar. So that's why I'm saying 60. I watch 95% cat videos. Yeah. A lot of people have, everyone's got their interest, right? Really shows in my trades. The problem though is that when you watch too much stuff, and I've said it a million times here, if you don't get anything out of let's say this person, these streams, if you don't get anything out, stop watching it. Like I don't care. Like stop watching it. If like people want, stop, literally stop. It doesn't matter to me or whoever. Like if it's not helping you, stop. So like if you're watching like a million people, or you're like literally go on Twitter. Twitter is a better example in my view, because the trading community on Twitter is a little more, I would say, cued into trading. YouTube community is a lot more investing and meme stocks and BS and all that crap. But if you're following 30 people on Twitter that are traders, right, that are calling out your plays or calling out trades, and you suck because you're following them, you're jumping left and right, and you're like, hey, like my net portfolio is doing worse, I'm just doing much worse, why am I following them? Then stop following them. Whatever works best for you at the end of the day is what matters. So I don't care, as long as you're making money, that's what matters, right? So it's been a fun time the past 6 months. You go back 6 months ago, the portfolio has gone on this like massive roller coaster. But I don't know. I mean, I'll show it every week. I've been taking a decent chunk of change out. As you guys have been seeing week to week, past like 3, 4, 5, 6 weeks have been all really, really good weeks off of where things were. And then we took a lot of funds from Webull and tossed it into Robinhood and made the covered call portfolio. So it's been good. The trading to 100K challenge, there's no challenge. There's no time frame on it. It's just a series to track things. And even after the time frame ends, then it'll be just okay. Then we'll go to 1 million. I don't know no plans to stop, and it will take a long time, but that's, you can see the growth, week by week, month, you can see the ups, the downs. That's why I think it's useful. A lot of lessons to be learned, a lot of stupid shit that I do that people can learn from and not do is the whole point, right? We can take a look at it after the fact and go, okay, that was stupid. Well, guess what? Now, hopefully someone who's watching doesn't make that mistake, or at least is aware of that mistake. That's what it's all about, I think. Just don't be lazy. Do your own work instead of relying on some dude online. Exactly. Market isn't getting people rich anymore, and now you have to. You could. I mean, maybe. If small caps get hot again, I mean, you could. There's a lot of bottomed out plays. Like you could probably, pick 5. Close your eyes, pick 5. And if we did see a substantial rally and the market went up to 450 on SPY and new highs and small caps, and the risk on trade was all there, and it was really, really hot. Yeah, maybe maybe in a perfect world, like those things all can kind of do well. But and we're probably not going to see that type of market again. So have a first day red day in 6 weeks yesterday because of the That's fine. Everyone, you could do it whatever you want to do. Thomas is like the guy at the casino that goes to every game trying to win. Yeah. I mean, if that's what you want to say, sure. I think there's been like a million lessons to be learned over the past six plus months. And I'm very happy to be able to be a part of this and learn from these lessons. Like that's what it's all about. You find what works for you. You have a better feel. You've got a better feel for things. I feel like for small caps nowadays, which we haven't had 7 more cycles of ups and downs playing out to actually act upon it. We've only had really the past 3 years, right? In small cap land, you've had, You've had the crazy rallies, and then now we've been risk off. So if you're going to play small caps and you're going to swing, there's always momentum. If you're going to swing small caps, you got to have a good feel about macro. And so if you haven't been soaking up the macro the past 6 months, that's your loss. Maybe it doesn't matter to you. Maybe it doesn't matter. Who cares? And you don't need to know the macro. But if you want to swing smalls in the future with size, with more conviction, more confidence, and do a lot better when the iron's hot, you got to know macro. And that's what I've learned the past 6 months. If you don't know macro, then you can't just try to guess bottoms and stuff like that. But you live and learn, right? That's the whole point of it. You live and learn. You see this play out, and now in 10 years, if something similar happens, you're going to have the script right there of what not to do, right? Every situation is different, but you have the script what not to do. But you can do whatever you want. This guy it's a funny thing, if you're into fitness, Olympic weightlifting coach, I'll coach. No, I mean, I've been lifting myself. I like my own thing. Doing it for I don't know, since I've been in junior year of high school, really. So I don't know how many years it's been, but it's been a long time. I really enjoy it's just something. It's something I do every day. It's like 5-6 days a week. It's a great it's a great, I don't want to say it's a stress. It's I guess you can look at it as a stress reliever or whatever, but it's just something that I'm, I can never see myself quitting. All right, let's see what IWM. So I think the potential play is going to be IWM against these highs of this 194 to 194.50 area. We'll see. Block that guy. It's a funny thing. Nothing against this guy. There's no reason to hate, but whoever that guy is, again, no one knows, right? Because you got a no profile picture guy on the internet. You can say whatever you want, but the reality is, I have shown the whole portfolio ups and downs. I have nothing to gain. I don't care about the views. If I had cared about the views, guys, would I still be doing this with 100 views of the stream, 200 views here, this, that? No, I don't make very much money from the streams. The YouTube channel is a few extra bucks, this channel at the end of the month. That's what it really is. It's not providing a lifestyle. It's not selling you this or that or saying, hey, look at me, I'm amazing, I'm doing this. I don't care. I hope we have a great community here and people can actually learn from each other. And that's what it's all about. If I'm an idiot and do something stupid, call me out and we can learn from it. That's what it's all about. The past 6 months, I think some great insight off of what we've seen. But we went from 250, just to be like, we can go through the accounts, we've done the P&Ls. I can pull up all the transactions. If you really want to see it one day, we can do a stream. I don't care. Oh, the Webull. There's nothing to hide, and even if I lost money, I don't care. I would still show it. Doesn't matter. I've been showing the small account challenge, all that stuff. Doesn't matter. All that stuff. I literally don't care. Like it's not for me to sell you on a lifestyle or to make you follow me because of this. I don't promote myself enough. That's big criticism people have had in the past. Like, man, people should be paying attention to this, or more people should be on the streams. I'm not one saying smash the thumbs up all the time, the like, and all this kind of BS. And it just, to me, it's like kind of, I don't know, sketch. It's like, it's a little scammy. It's not how I want to portray myself in a sense, but it is what it is. I took $250 in the Webull account. I've added probably about, over the course of like that time, $250 to maybe a couple $1,000s from deposits and from whatever throughout, like, let's say 2019 and early 2020. But okay, so let's say it's a couple $1,000s. We took that to 50,000, which was insane, small cap insanity, and then obviously the backside of small caps were annihilating. However, along that time, we're taking money out little by little. You can see I have the receipts. So what I've essentially is, gone back through it. I haven't done the exact math. We can do the math one day. I have taken out more than I have put in, because I've taken out thousands over the past couple of months, past year and a half, 2 years, really, past year and a half. I've taken out thousands of the Webull portfolio. I'm not, at this point in time, just keeping it every single day. Like, oh, if we make money in there, or if I have, do decently on a couple trades, I'll take some money out. We took a lot of that money, put it into the Robinhood. It's a bit slower. It's a bit less volatile up and down, which is why we did that, right? So we took it from $250, added a couple thousand to 50K. 50K went to 25, and then at the lows, unrealized, we hit down to like 12 or 11K, which then bounced back up to like 22K or whatever it is, all across taking a lot of money out. Whatever, it is what it is. But, a lot of lessons to be learned along this past, 2, 3, 4 years, whatever it's been, since 2019. I don't know, it's been like 3 years now. Actually, it's about to be 3 years since I created that Webull account. So it's 3 years in, But now, now with the hedges, now how I'm playing it now, I feel like I'm 10 times better positioned. I know I have a much better handle upon how I'm, managing the portfolio, and it's not as going to be as volatile as it was. But that comes with the experience, comes with the time, right? It comes with the time at the end of the day. All right, so here's what we got on SPY. What's SPY up to? SPY is still trying to hold this area. Don't be that guy. Anyone, you guys, you can have your opinions. Like, everyone can have their opinions. You can hate me or whatever you want to do, but that's, there's a lot of people out there who, and everyone's different too. If you're going through a tough time, and it's easy. A lot of people were going through a tough time in the past 6 months, right? It's easy to come on and try to, say, oh, this guy sucks, or this, screw that guy, like F this guy. A lot of people you can say across the big names, the big finance guys on YouTube, when they tell you a stock, that when they are buying a stock and you buy that stock and it doesn't do well, like, it sucks. You're mad at them, right? You're mad at them. Yeah, it makes sense. I just have no interest in telling you what to buy. So there's none of that. We don't do that here. I show everything for full transparency reasons, and also because there's a lot of freaking lessons to learn from this stuff, like from my mistakes, my wins, my losses. There's so much freaking to learn. So here we go. SPY's coming out a little bit. That aside, IWM is getting a little bit stuffed right here. This 194, it's struggling. It's struggling there. If there was a play, that's the play, I think. We'll see. We'll see. Love the transparency. I think the transparency is what it's all about, in my view, at the end of the day. So I think it's funny when people try to question that. It's like, dude, I mean, if you're going to question my transparency, there's 1,000 other people that you can question before you even question my stuff. And if you wanted to question it, and I had enough people who were like, hey, I don't believe you, I will do a live stream and show you everything, because I do it anyway. Doesn't matter. Since the beginning, Williams followed me since the beginning. Small caps. I mean, you have to understand that the small caps were super hot. That's all we kind of knew a year, 2 years ago, in terms of like, I was like, well, why would you trade SPY, or why would you go trade options, or why would you trade this and this when you could just try small caps? I mean, yeah, sure. That's when it was, when the market was super hot. But now you realize like you got to learn other things. There's more to that game if you want to have something to trade for, I don't know, the longevity, ups and downs, bear markets, bull markets, risk on, risk off. Small caps, we always can go back to on risk on times. When it's risk on, we always can go back to it. I'd change one thing he does. He's all over the place. Trading just keeps losing. I mean, if I was just losing, then the account would be at zero, right? Wouldn't it? I mean, that's what it would be if I was losing. So, day trading calls, loops. That was the biggest. No, I mean, I'm not gonna like lie. There's no reason to lie, but the whole biggest thing was I was trying to do 1,000 different things in one portfolio. Now we've kind of separated things a lot in terms of, okay, with the Robinhood, we kind of that one does its thing. There's minimal time per week. And you have a set small count, I guess, to test out day trades. The whole day trades these days, I'm not really doing very much day trades. Maybe back 6 months ago, I was trying and dabbling with stuff, and you live and you learn, right? At the end of the day, nowadays, the only day trades are in the small count, and I'm just logging data from that. So all I want to do is build out like a massive data set from that, like what I've done well, what I've done wrong, what's worked for me, what's not worked for me, so that I have that in the future to go back on at some point if I wanted to, or felt like, hey, I don't really have a good feel. I don't really see any opportunities right now from a swing approach. I'm very confused on what the market's going to do. Maybe that's what I want to do, and I want to just stick to day trades. Well, I'm going to have that much more data from, all right? And maybe I learn, hey, I suck at day trades. I'm not going to day trade. Like, that's essentially kind of like what I always have felt, and how from my initial data findings, how I feel. But maybe that's just what I find, right? But, that's the whole point. That is the whole point. Thoughts on NSPR earnings? NSPR had earnings. They had $26 million cash, I believe. The stock's trading at like a $20 million market cap. I forget what exactly it was. But, that's essentially fine. It's just a small cap trading below cash. They had decent, I guess, increase in sales numbers from what I saw. I'm not worried about it. I'm still waiting for it to to spike on a PR or pump or whatever. That's all I'm waiting for on it. It's been a pain. Shouldn't have held that through the past risk off period, but you live and learn, right? At the end of the day, find someone that wins and stick with it. No, I mean, that's the whole point of trying 1,000 things, because when you try a ton of stuff, you can cut out the fat. So as you kind of progress over time, yeah, you figure it out. 6 months ago, how did we know what was going to happen in the markets? No, like we didn't really know what was going to happen, right? Now we've got all this to kind of play off of, and then you live and learn. Desperate to win and trying it all. Yeah, dude, I'm desperate to win. Like, I'm sitting here crying at the screen every day. No, I'm trying it all until I can build the data. Again, like I've said before, a lot of people who are watching too are young. 24, you have the whole life ahead of you. So if you figure out, I suck at all these things, I'm actually good at these things, by the time you're freaking 30 years old, you've still got a life of gains ahead of you in terms of what what you've done well, what you do well at. I know I 100% agree with that, right? 100% agree with that. But there's nothing wrong with testing things out. And I'm telling you, especially when you're young, you try things, you lose, you win, you figure out what you're good at. I'm pausing the vid, can't imagine what you're saying, blah, blah, blah. The thing is, if you like making money, that's fine. Then stop watching. If you're not getting something out of it, stop watching. It's funny because this guy, like, for those who are not sure who this guy, he's a funny guy. He used to be like, I'm sure you can go back and look up people's comments in the past. I think I can. I'm pretty sure you can. Maybe he has made a new account. Who knows? But it's funny because you go back talking small caps left and right, for like a long time. And then all of a sudden, just like the market started to turn, market started to get pretty tough, 6 months ago, 8 months ago. And the guy just went from like providing insight on the streams, providing insight in the comments to just like starting to just say some shit, hating on whatever, this and that, saying some, I don't know. I have no idea. People have things going on in their life. Market gets tough. You lose some money. They have other issues financially. Everyone has their own situations that cause them to do whatever they want to do. But all I'm going to say, I don't block anyone. I don't need to block anyone really, unless it's a spam comment. I'm not going to block anyone because, who cares? Let them comment on, whatever. But at the end of the day, stuff like that, it's not stuff I care to really entertain. The whole point of what we do here every single day, what we do on this streams, what we do in the lives, what we do in the small account, the covered call, is we're providing a ton of different things. And you can take it and run with it however you see fit, is what I see. And obviously, as I dial in to say, okay, I'm really, really good at small caps when it's time, well, we patiently wait for the time. And in the meantime, we kind of tread water and you kind of play around and try to learn what you can. And that's what it is, But it's funny, though. It's funny. Learn from your mistakes. That's what it's all about, in my view. Let's see. We talk about NSPR. We talk about all that. Labu momentum. Let's see. Okay, so IWM can't get that 194. It can't break that 194. So there's that. S&P, also a little bit of weakness. It's at VWAP right now, so this is a key spot. We're at some pretty key spots right now across the market. By the way, XBI absolutely giving it back here, just like falling off. It's only up 1%. It was up like 3% or whatever it was not that long ago. Very close to stopping out on the on the Mara position. Mara did not break a new high, so I'm going to hold that, but very close to stopping out on that. We'll see if we get strength here, and we'll probably get out. Just mad because my account was up to 50K at one point, then it fell off a ton, and you're going to have these massive swings. The whole point of learning the past 6-8 months is that so you don't have these massive swings, but had we known what was about to happen, and we didn't just, again, let's think of this too. We didn't just see, a normal pullback or like correction across growth. We saw growth explode to levels we've never seen before. We were like, what is it? It doesn't even make any sense. Like, this stuff makes no sense. These stocks are going crazy. And then they gave it all back. And some stocks went below pandemic lows like that, like in 6 months. So we had some of the most insane, ups and downs that you're ever going to see. And maybe we never see something like that again, for all we friggin' know. I don't know, right? It was not an easy environment to trade in, number one. And number two, for those who have never been around through periods like the tech bubble, like 2008, 2009 timeframe, you only have so much experience, hard experience from what you do. But whatever. Let's see. Well, he's continuing. I guess he didn't pause the video. It's funny. I remember him. Used to be cool. Yeah, whatever. Who cares? Meme stock selling off. AMC. Let's see what AMC is doing. Let's see. 22. Yeah. We talked about AMC too a couple days ago. I was like, AMC, when this thing rallied up, what it tells you is that retail is getting really, really feeling good. They're feeling really nice about what's going on. Get up to like $28, and then it starts to fall off. The signal here is that, retail kind of comes in. Let's see what fear and greed's like. I think I'm not sure if it's updated yet. Retail gets going. Fear and greed resets, which it pretty much has. Let's see what it's up to. It's still 48. So it's still just sitting where it's kind of been. And then you kind of start to see this start to unwind. And then the market, at least the last time AMC spiked up, people started feeling really good. That was a bear market rally because that was actually at the end of March. We ended up going a lot lower right after that. And then AMC was selling off for months, essentially, after that point in time. AMC, I'm not really surprised this is in the red, though, because it had that massive explosion to the upside. If it breaks below, let's see, where is it at? Puts here would have been great, I guess, 2 days ago. Breaks below 22. 22 is going to be your spot. If it can hold 22, maybe it stays alive. But if it breaks below that, you start to unwind, I think, in a pretty fast way. See, SPY is 418.41. Let's pop back up, right? SPY pop back up. SPY's up towards the highs. IWM, oh yeah, so then we got some strength now at least. Certain stuff's falling back off, but XBI is bouncing a little bit. Yeah, all this stuff's kind of bouncing. IWM broke that 194. Now let's see if it wants to go for Monday's highs. Thought it'd be total risk. Still risk on, but not enough to run the memes. Yeah, that's what it seems like. Let's see what the 10-year. 10-year is just, after 10 years, kind of falling off a bit. 2.723. Yeah, it kind of, it dumped, bounced back up to 2.77-ish, and then fell back off. This guy's still talking. Don't lose too much. I hope, at the end of the day, I hope he does well. That's, whatever. Hope the guy, I'm surprised he's still around, but whatever. It's been a long time. Let's see. SPY 1.7. Yeah, it's still, if it can't break these highs, it's something to watch. But what it do is so far we got the strength because it held VWAP. It essentially held the highs of Monday and it held VWAP. So that's what we're looking at for now on SPY. But you need to get a break over pre-market highs 419 for it to make a bigger move. He keeps going. It's funny. It's Kenneth. No, it's fun. He's just one of those. I don't have very many people that are like that, obviously, but he's one of those guys. It is what it is. Honestly, you wouldn't get the light. You wouldn't see the light of day, depending upon if you want to go to like large channels. So I guess he comes to channels like this and gets to see the light. But whatever. UVXY massive dump. This thing came off it was like 5% in pre-market. Yeah, it's down like 6. Yeah, it's down to 950. So, I mean, VIX, where's the VIX? That trend line's gone. Now, is it a fake out? Whatever, we'll see. That trend line is broken substantially on the VIX. So, what this tells us is that, hey, we might be in a much less volatile environment, right? Kyle's got to leave. Peace out, man. Peace out. Peace. Just got to laugh. No, I mean, that's what it is. It's people who do that. First off, I mean, I'm 100% open to criticism, as I've said in the past. Like, if there's shit that people are like, hey, like, dude, like you're off on this, or this has been stupid. Like, stop doing this. 100%, like, call it out. Like, say it how you see it, because we don't shy away from that stuff, because it's ultimately that's helpful. And then I'll say the same thing to people here. Like, if people are like, oh man, I'm going long, like AMC, at $25 like Monday. I'm like, yeah, be careful. Like, that's maybe not the best move. Like, just think about this. This stock spiked up 100% off the bottom very, very fast. You're just chasing momentum. Like, could it keep going and squeezing? Yeah, sure. You're just chasing momentum. Is that where do you really want to chase momentum right now? And all of a sudden find yourself underwater, I don't know. And so hopefully that's what the chats and that's what the streams are all for. Hence why we do a lot more streams these days. Because they're more fun. They're more fun. But the funny thing too about, like, now SPY is trying to go for a new high. The funny thing too about comments like that is the biggest thing has been like, oh, you've been blowing up your account. If I blew up the account, first off, I would be at 0, right? Wouldn't you be at, let's say, like, if you had, I don't know, started with whatever, and wouldn't you be back down pretty close to 0? And that's blowing it up. The account back up to 20 something K after taking out probably like $10,000 over the past year and putting a lot of that money. Some of it I used, some of it also I put into the Robinhood. That doesn't sound like blowing it up to me. I mean, I don't know. You had the ups and downs. The market's been wild. Is that an excuse? Yes and no. I mean, no, it is, because we haven't seen this before, but it isn't, because now you take that, you learn from it, and then this doesn't happen in the future. So you don't have the wild swings. We don't want the wild swings in the future, I guess, right? They're good when they're to the upside, but realistically, it's not healthy. So, you learn from it though. That's all you can do. Been on a roll of a lot of freed up cash, some good gapper plays. I think this is going to be, let's see. Let's check out the daily charts on some of these guys. So look at SPY's daily. It seems like so far it's a gap and go. It had a slight pullback. It held the top of the range, and now it's going. So it's as long as it holds the top of this range, it's good. If it falls below this top of this range, it's going to probably, this is not going to be a healthy rip. That's today's question. Do we hold up and do we close over like 418, or do we end up giving this back by the end of the day? We're going to find out come the end of the day. Sold deep in the money covered calls. Nice. Been on a roll. Let's see. The way you learn by losing a ton of money first. No, I'm 100%. I mean, realistically, I back when I was in high school, I had started an account. I played options, got destroyed on options. I always was like, yeah, I really would love to play options in the future, but just didn't know how to play them. Didn't know what I was doing. Was playing earnings, options, earnings plays. Stupidest stuff you can do. I like that. I truly blew those accounts up. I don't know how much I had, but I had like at one point like $2,500 in college, like early on in college. Not very much money, but also like for me at the time was a lot of money because it's all I had. Lost it all. Like that was blowing it up. Like that was a true blow up, you know. And then starting from like I guess you can make money and then blow it up, I guess. But starting from the Webull account, I just, I don't really see how that account, even the wild swings it has seen over the past like 3 years, really from a couple $100 to 50K, actually like 50, maybe it's like 55. I forget where it hit the peaks, but whatever, to whatever it was, then back down to like sub 20 and then back over 20. Along taking out about like 10 grand or whatever. We can figure out the actual number of what the math is and how much I've taken out, but I don't know. Doesn't sound like a blow up to me, but even if it was, so what? You live and learn. You're gonna be that. I would be much more inclined to follow someone or learn from somebody which I've seen many people have come and go on Twitter and stuff that have blown up accounts, because you can learn so much from going back through the time when they were blowing it up, right? What were they doing? How was their mental? How was their this? How was their that? Like, were they respecting the things that they were doing before, right? That's the best to learn from, I think. But people don't want to learn from that. People want to learn and they want to see the flashy gains and they want to say, oh my God, I made $1 million today, right? Or whatever, made how many dollars in a day or 10 seconds and this trade, this trade, that trade. And you can learn from that. There's a lot of lessons to be had from that. But the bigger lessons in my view are from the losses. Okay, IWM, here it is. I am going to say, let's see the small account. Let's see the small account challenge. Mara is still holding up at 15. So I have that Mara short that we bought yesterday on the stream that I'm just chilling on for right now. As long as it doesn't break a new high, I'm going to hold it. IWM coming back. Let's see what it does here at this 194. I would like another bounce. But I do like, as I said, if there was a play on the short side, I do like IWM on the short side here versus Monday's highs, which it breached barely, but that 5-minute candle is pretty nasty. It immediately sold back off. So if it can't hold this 194, that's not a good look for IWM. So let me see if I can find, I'll pull it up on my phone while we're watching it. I'm going to see if I can find something that looks appealing option-wise. Friday, probably Friday. I guess you can play today's options, but that's, risky AF. It's at 194, so you can play like some 190s or 189. Yeah, 190s aren't bad. I might look at these 190 puts. We'll see. We'll keep an eye on it, and we'll see if we get a better opportunity, or it's almost been 30 minutes, I guess. So yeah, we got time. TLT going higher. Yep. I mean, the 10 years coming down. TLT is pushing higher. Let's see where TLT is. I still want to pull back, but I might not get it. So it is what it is. Unfortunately, I didn't really get a chance to buy much more of the TLTs. Let me check my port positions here just to make sure nothing crazy is happening. Sock still back up. Yep. Knew that was going to happen. Mara, whatever. Mara over the 1575. I get alerted. I didn't get alerted yet. So that's still holding up. Apple, maybe it was I got like a $30 partial fractional share of Apple free stock or something. That's why that's there. Balabu, all these in the red are all the hedges, which is fine. They're all down. Amazon hedge. Let's see. Where is my average? It's actually just below my average now, believe it or not. Not bad though. It's like pretty close to the average. These SPXLs are decently below the average because SPY ripped, so that's what you're going to get on these. But there's September 16th, so we'll leave it. And also not a big position. The TQQQ hedge as well is slightly red now. The Labu hedge is red, but nothing too bad. Honestly, it's fine. Like you see how the portfolio. Let's see where it's at. 28, so it's like 21. It's honestly been hedged and sitting pretty nice. It's in terms of not moving too much based off of the recent market moves, which hedges have been, I guess, doing their job, right? All right, where's SPY? So SPY is just, we're just, here's a little very short, small range, but we're just in this little range. So we're holding the top of the range of the big picture, 417, and then we're, so between 417 and 419 is your range on SPY. What do you got on, where is it? IWM. IWM is trying to crack below this 194 right now, but let's see if it bounces here. Ideally, what you'd want to see on this to see strength is it bounces right here and goes and breaks this high of the day. If that's the case, then the long trade is the better trade. Bitcoin over 24. Kenneth's got to get out of here. Have a good day, man. Peace. Peace out. Options are a leverage trade. Leverage goes in both directions, unfortunately. Safest. Yeah, let's check on the covered call portfolio. Let me see if I can pull it up. Let me check it out. I got to see what else. If there's anything I got to do here. I don't think there is. I sold all the options on Monday, I think, or Tuesday. So there shouldn't be much to do. It's up today, but is there anything that's at risk? So we have, let's see, the FSR 9 put that I sold is great. That's not going to. I guess we could see FSR plumb, but a good chance that holds up. Snapchat killing it. Snap, I sold an 1150 call. So Snap is at 1070. It's still got to go a ton more for that to even get taken out. So that's nowhere near getting taken out. Let's see. CCL killing it. CCL, I sold a $11 call. So I'm good on these. There's a good chance that, well, very low chance that any of these things get taken out this week, unless we see continued massive rally. Very good chance that these end up holding up nicely. So that's good. This portfolio essentially did like $50 this week in cash flow. Nothing crazy, like nothing to be like, oh my gosh about, right? But you do the math, $50 a week, do that for a year. Now all of a sudden the next year you're making 60, 70. Obviously you toss in some appreciation of the stocks. In a perfect world, long-term, big picture, you get some over time. In the short term, you can't bet on it, can't guarantee it, but you're still going to get some, obviously when you're buying stuff that's been annihilated, you're in a much better risk reward, right? So this is looking pretty good. You can see how it can compound. This is a fun portfolio, and I really, I really enjoy this one too, but it's not taking up very much time. It's, pretty minimal. You come in here, check in. Okay. Did they hit the targets? Nope. All the covered calls or all the options I sold are all going to expire worthless. At least right now, all these should expire worthless based on this week's action, unless we just either rip face and go straight up the next 2 days, or we just dump off, the floor gets let out below and China does some crazy stuff. Who knows? Like then, obviously, yeah, we can maybe hit some of these and these puts get filled, whatever. So we're just chilling. Okay, this doesn't look too good on IWM. I think this could be a decent play for a good risk on the short play. This guy continues to come back. I don't understand why he keeps coming back, but whatever. Let's see. 10 years coming down a decent bit. SPX. Let's see where's SPY. SPY. Yeah, SPY 418. It's kind of weak. This IWM is pretty weak, or at least it's breaking back below this 194. At least for now, it false breakout here. You got like you wanted to break above, and then you couldn't do it. So if this 194 can't hold up, man, it's probably coming down. At least to 193, like 25 lows of the day, and then, or VWAP, I guess you'd say first. Buy cover calls back at 10, then roll them out. No broker fees for me at 10 cents or less. Glad I didn't have my Apple put idea. Yeah, I mean, it still could be a good idea. If you look at, let's see where Apple is. It still could be a good idea for a pullback if we get a healthy pullback, which I think we still need to get a healthy pullback. That would be a pretty good target to have. And that's not that big of a move down. Realistically, Apple moved off the lows. It's up 30%. So you're only asking for this thing to come back from where it's at now to that gap fill. You're only asking for 6% pullback, which is really not that much. And it could happen in a week or two or in a month or two, right? No problem. So it could be good. Maybe it's a better risk reward versus into the 170s. But, I don't think it's a bad idea, especially as a hedge. Now you have two gaps on Apple. You have this gap from today's CPI right here. And then you have the second one that we have circled there too. So there's that. Small caps are not doing well today. A lot of red. Yeah, I mean, I'm looking at, let's see. It's interesting because IWM is up 2%. It's more than the S&P, but yeah. QQQ's up a little over 2, and SPY is up 1.6. So it's still IWM. It's not like we can see it in IWM where it's substantially underperforming SPY. It's not doing that, at least for now. But I think in small cap land, let me see what we have. Not like I'm noticing too much. Some of my small caps are up a little bit, but there's not much volume there. If you look at some of the top gainers, let's see what the top gainers are. There's not much in terms of action here compared to how it's been the past 2 weeks. It was a lot more action the past couple weeks. Only a 50%er, which It's still a lot, but it's not that much compared to what we had seen in the past. This guy. Shiba Inu creator goes by name Royal She, but little, what the heck is that? We're trying to buy an at the money SPY put, got an order in. I mean, the risk is essentially the highs, right? So you're risking this 419 on SPY, right? You're risking, I mean, there's been it's like a quad top almost. I don't know how many candles are just 5-minute candles, just can't break that 419. So that's your spot. It's very nicely drawn out trade wise. You're kind of in between this little range. Obviously, if your anticipation is that we're going to break one way or the other today, either we're going to break out 419 and go 420 plus right today, great. There's the call play. Or you're going to say puts, we're going to break this 417.50 and drop into this gap. Great, but the better risk reward is to take the position closer to those areas. So calls closer to 417.50, which we just kind of had a few minutes ago. And then puts would be up here towards, honestly, the next 50 cents would be a better risk reward here. See if it can break through, you're going to have a move, but that would be the better risk reward. SPY 418 put for 125. 418, yeah, I mean, if this thing was to flush through and break down below, yeah. I mean, if it breaks over 419 and starts to hold up, that's a stop. At least unless a fake out, right? But that would be the way to play the stop. Fake out could be anything. Hedges in the moment, but if we keep going parabolic, I might need to consider some. I mean, we'll see. But I mean, if this market's going to actually be sustained and this is going to sustain and we're going to make a solid move back up, I think a healthy pullback is not a bad thing. Is not a bad thing at all. Let's see if this is updated. This is the current projections for the September rate hike. Yeah, so it shifted back over to, they just flopped. They flip-flopped. So we were looking at roughly a 65% chance of a 75 basis point hike. Now it's a 62% chance of a 50 based on that CPI. I still think it could probably go either way. And then September's CPI report will be what tells you where the heck you go, what the Fed does. If September's CPI report comes out and it's we don't see any movement still on core CPI, maybe they just do a 75 and say, yeah, let's just hammer this thing and let's get it done, right? But if not, this next September core CPI starts to come down, closer to 5, maybe they decide to go with the 50 and they say, hey, I think that we're going to see the effects right after the fact of what we've done, what we've been doing are all going to start playing out in the coming months. And so we're just going to do a 50 here. No need to do a 75 for now. We'll see how it goes. We're still hiking, just not necessarily as aggressive as we could because we don't see the need. That's maybe what they say. We'll see. Stop at 85 cents on those SPY puts. I like the IWM. I do. I'm going to play it versus the highs here. Let's take a shot. So these are going for 50 cents on these 190s for Friday. I can get them for 49 cents. 40. If I can get it for 48, I will take it. Take this at 48. Let's see if I can get it. The order is in. I like doing I like watching the charts on TradingView here and then doing the orders on my phone. The Weeble's mobile app is pretty darn good in terms of being able to execute your stuff pretty quick. I already sold my TQQQ call. That's solid. I mean, I would probably advise it's not a bad idea because pretty strong strength after CPI. We're pretty freaking parabolic in terms of the move off the lows on the Nas. And also the Nasdaq's at the look at this. Nasdaq's at the trend line. Nasdaq's not over. By the way, there's a little bit of weakness here. I got filled on my IWM. 48 cents for a 190 put for Friday on the small account. We'll see if it works out. Pretty big gap to fill back down after the CPI. Yeah, fair enough. But we're at this trend line. So 326 is going to be key. We're right at the spot on the Qs. So that's not a bad spot realistically at all to trim off that TQQQ and either look for a hedge or just sit back and cash. I mean, if you think we're going to break out, then sit back and cash and let's see if we get it, right? No need to rush. No need to rush in and force stuff. All right, so IWM, what I want to see it do here is I want to see it reject or essentially not break above this 194.67 is the high. 194.68 is the high of the day. And I have a small count play here on IWM puts for Friday's expiration. I could have played today's, but I'm not going to. It's still technically it's $4 out of the money. So I wanted to go with Friday's expiration. I could have played something, closer to the money, I guess, for today. That would have been cheap, but I don't want to play with something super, super volatile. TQQ puts now. I mean, I have it for the hedge. I have it to hedge myself, so that's what I have, but it also is just a hedge. So I'm not necessarily sized massively into it, but I do like the risk reward on that based off that channel that we're looking at on QQQ. It's not a bad spot. That trend line. I'm not going to do it. Let it play out. That's a fine answer as well. INTC short term. I like it. I really like it, but I'm more of like a probably 6 month plus time horizon on this guy. I would say. It's in my Robinhood covered call portfolio, but if you zoom out on this chart, back out 5 years on INTC Intel. 2016, 2017, very nice consolidation year. Actually was a high in 2014, 2015. Essentially that was where it's at right now. So right in the mid 30s is a pretty darn good spot, I think. It's also a very nice volume node right here. I like it for a move back up and to at least fill this volume gap up here if the market was to rally. Either way, it's not a stock that I plan to sell anytime soon. So I'm going to hold what I have on our good friends here at Intel. Let's see. 2% overall, looking to hedge. Solid. I'm not going to do it. TQQ. Yeah. Well, I mean, I think today is going to be very telling. It seems like we're not getting too much directional movement so far, believe it or not. It's like kind of boring. SPY is just like in this little range. It's been, over a half hour. We haven't really gotten much movement. We've only had a couple dollar range on SPY. Yesterday was crazy. Yesterday, the low of the day was 410.25. High of the day was not even 413. So you had about a $2.50 range intraday, the entire day on SPY. That's like pre-COVID type of range, right? Like where like the market doesn't really move that much. Like that's what it feels like, Marcel, appreciate it. Thank you. Appreciate that. Bought TQQ 36 puts 105. Don't think it's a bad idea. No, I don't think so. Let's see if SPY can break 419. Maybe we get some more strength today. I was kind of thinking that, to be honest, maybe the other thought was, okay, maybe market wise today is a squeeze out day. Everyone's like, oh, CPI is coming down. Here we go. Let's run it up. And then followed by the next 2 days of just sell off and give it back. Because you squeeze out a lot of shorts and you give it back. Maybe that's not going to happen, but I was thinking that could be, it's always a thought. SPY option is 0 day to expiration. TQQ is Friday expiration. I mean, if it was me, I would probably play something farther out because those charts for me, I'm looking at that that QQQ chart. That's a pretty big range, or at least, it's probably a bigger range. But if you get the move, if that move does actually happen in this week time frame, you're going to get a killer trade. Quick 0 day DT. I have my IWM puts, by the way, I'll pull up the chart of them over here on Webull. Where are they? Here they are. This is in the, let me pull up the Roth instead. This is the small account I got to pull up. So I have these. I'll pull the 1 minute chart on these so we can kind of see it trade a little bit better. They hit a low of 45. These are IWM 190 puts. I have an average at 48. They're going for 50 by 52 right now. Could I take the gains? Yes, but I'm looking for an actual move here on IWM. We haven't really had it. So either it's going to stop me out or I'm going to get a pullback to VWAP, and we'll see how it handles that. If it flushes through, I'll stay in and kind of put a trailing stop loss on it. If not, I'll just take the gains, or we're going to get stopped out for a few dollar loss, which is that's what it is. If it wants to push up over this high of the day. So it is kind of strong though. It's kind of holding this 193 or 194 area for now. fear and greed hasn't really changed. We talked about seasonality. We talked about this portfolio. How's it doing here? It's just the same thing. Nothing really is moving. Snapchat, I'm not worried. CCL, where did I sell a CCL? I sold a CCL 11 call. Fine. Worked out really nice because CCL was down like 5% yesterday. I think we did it on the stream too. We sold the CCL put, 850 put, because like I kind of like CCL. Well, not kind of. I like CCL. Good support here in the low eights. So if I'm okay, 850 put. If we got filled there, I would be happy to buy it there anyway. My average is like at 860 something like that. I think on the 100 that I have. So I was fine to buy that this week. We're not going to get that most likely unless we see an absolute dump, because now we're at over 10 on CCL. So I played that one nice, in terms of selling the call and the put. So a cash flow, little double cash flow action on the week. Pretty much strangled CCL. And it's going to end up right in the middle, and those options are expiring worthless, and we're going to be sitting nice. Any chance you could have a NEO and Tesla and NVIDIA? Let's take a look at them. I bet against every big market move. It's just how I cope with how much I've lost. CCL, it's funny. CCL, it's very true. It likes to move in those 5% increments. Yeah, I found that it had like CCL is one of those stocks that you could trade just shares. Options are, I guess if you play in the money options too, they could be fine. That's a pretty fun stock to trade. It's got some good range. Believe it or not, for a stock at $10, it provides some good range. It provides some nice option contracts to trade, and it's a fun one to play. It really is. Let's see. Okay, let's jump over to Tesla. I got Tesla pulled up here. Tesla's up 1.5%. It's actually, Tesla gave back Tesla pretty much gave back the entire gap up this pre-market. And then it's pulled right back into pretty much the highs of yesterday. It's holding up around this area right here, this like 860 roughly this 860 area on Tesla. Let's look at NEO. NEO, I remember looking at this morning, was pretty strong from what I saw. Let's see if it's still holding up. Yeah, NEO's up 3.5%. It was looking pretty good in pre-market, right? Hit up to, it's actually, what do I have this trend line here? What's this trend line at? Oh, I got rid of some of these. This is just this old little wedge that we had on NEO. But believe it or not, it's just like, for now, it's just kind of like holding on to that 50 SMA. It's like right now it's below it, so it's got to get above. So NEO needs to get over like this 20, like 25. But it's just like, weirdly enough, it's like a magnet to that 50 SMA. Like it's just like hovering on, whether it's above or below. It's just like every day, every candle has got to touch that 50 SMA. So for today, it hasn't. It's fallen below. If it starts to fall below this 1850, look out for downside. But it's honestly surprisingly held up a lot better than I thought on NEO the past couple of weeks, months, honestly, believe it or not. NVDA got up here. NVIDIA up to a little over 2%. Bouncing so far, it bounced at that 50-period moving average. So if it holds this 170, which it pretty much did yesterday, that's your spot. I have, there's some speculation, at least in my mind, that if we saw a market pullback, good chance we probably fall below that 160 would be a better spot to start maybe buying some. Maybe we don't see that area, possible. But once it broke this downtrend right here, it had a nice move. So this is it's going to have a nice gap to fill off that earnings back to like 186 when the time comes. That could be some good areas as a target if you were to buy a dip in the future, looking for a move back up to 186 to start locking gains, that gap fill eventually. But if it holds 50 SMA, you can't deny the strength. I would like to see it go lower. I think it could go lower because it's sitting on that 50 SMA right now. Market has been very, very strong. This had earnings. It was weak off those earnings. If we see a weaker market, good chance this is one of the weaker stocks in that environment in the next couple of weeks, if that's what happened. So we'll see, but that's kind of what I would like to see. If it can't hold that 170, probably down towards 160, and we can kind of go from there. By the way, these IWMs, 51 by 53 right now, so it's up $5 roughly on that ish, $4 or $5. Let's see where IWM is at. It fell right back to this 194. Yeah. So you want to see if it breaks this down or not. That's the play. But good thing I went, shorted it up into here. So better risk reward versus those highs. Now, obviously, you could take profits on a move down to here. If you're playing something that was like a zero data expiration and you really dialed in your entry, this is a good spot, logical spot. 194 was your resistance, acting as support right now. Good spot to take profits. But if this starts to get weak and break down, which it seems like it's trying to do right now, there could be a pretty decent move back down, similar to what we saw on Monday when it fell back below that 194. So that's what I'm kind of looking for here. And we'll see if we're going to get it. SPY towards the bottom end of its range as well at VWAP right now. Another spot, if you had shorted against this pre-market high, it's a good spot to take gains because you're up a nice bit on a short-term trade. However, the bigger money can be made if this was to break down. This is where the big money can be made on the puts. But, again, it hasn't happened yet. So what you'd want to do is if you had multiple option contracts on a position, which is what you would ideally want to do, is you take half of them off into this area and your stop loss now goes to break even, wherever that break even may be. This way you guaranteed a winning trade. And now if we end up going lower, it's house money and you ride this wave down, set your trailing stop loss and just let it move and just head it on down. That's what I do. A lot of volume. Yeah, NEO has been, that 20 mark has been very, very key for NEO. Okay, these are actually making some big moves. So look at IWM pushing down below that 194 now. Whoa, that's a pretty big move down. Pretty big move down. Those options, I'm up like 20% now on these. Let's see how it handles the VWAP area. Apple falling off as well. We're kind of getting what we thought was this little speculation. We'll see if we end up seeing it really unravel the rest of the day. But this is what the speculation was. The speculation was, hey, we rip off the morning and then maybe just give it all back instead of a gap and go. It's very possible that we gap up and then give some of this gap back. We're going to see how much we want to give back. But SPY is still at a crucial spot. SPY could easily hold this and bounce. So this would be a support area. It was a prior resistance. So we're at a prior key spot on SPY right now as we speak. People want to take that profit. Usually 10:30 a.m. starts to sell off, gets ugly towards noon. I think we could see it. But no guarantees, right? Obviously. Go on a seniors cruise. Jeez. Get a sugar mom on a seniors cruise. I have yet to ever be on a cruise. Believe it or not. I got the carnival pamphlet or whatever, their little thing in the mail a couple weeks ago. That got me to buy it on the covered call challenge portfolio. Covered call portfolio, not challenge. There's no challenge. There's no challenge there. They got me to buy it, and then the covered call portfolio. So, maybe it's made me some money actually off of where it's been. It's been fun, but that's all I've done. I guess I need to make enough to go on a cruise from the CCL gains by itself for me to justify it. I guess. Haven't done that yet. CCL is probably maybe just, maybe a couple $100 max, at least on this account. So for now, we chill. Pumps, you get a free ticket. Yeah, the profits. Yeah. That's one way to do it. So, okay. So we kind of are still, we're breaking down lower highs, but we want to see this VWAP on IWM needs to kind of break for a really big move down, I think. SPY is right there as well. SPY is teetering on VWAP. VWAP happens to be right in line with Monday's highs, the top of this consolidation range. The setup is there for us to really unwind today. And we don't seem to be we're moving super, super volatile in terms of up or down. So it could just be kind of a slow one. But that's what it's setups are there. I mean, this is a bounce spot. If I was looking at this with fresh eyes, I say this is a spot to go long. Right? Just from what we're seeing. But you factor in CPI, you factor in a massive gap up, you factor in the market's been very overbought the past couple of days, weeks anyway, you can maybe justify this is a breakdown zone, right? So that's where it becomes a lot less, a play like this becomes a lot less technical and a lot more, I don't want to say it's feel, but it's experience and it's feel. Because you have to factor in more than just the short-term technicals, right? Technicals are cool, but that's not going to make or break at the end of the day. Technicals are not going to, always be the only reason you're in a trade, right? So you have to think about the other factors at play. And this is one of those where I think you could factor in a lot of things that could tell us we can be heading down right now on this. By the way, those IWMs, oh my, we're breaking that VWAP right now on IWM right now as we speak. I need to put a trailing stop on this thing because we are up fat on this small account challenge play. I am up fat on it, so I'm going to put a trailing stop. Let's put a trailing stop at 53 cents. It's at 66. Gee, it's just going for it. I could take a 20-cent gain right now. I'm going to put it at 57. I'm going to put this at 57 or 58, guarantee a 20% on the play. Let's do a stop. I know you can't see this unfortunately. I mean, I'll get rid of myself so you guys can actually see what I'm doing. Let's see. Boom. Okay, so I'm in the order entry right here. So I'm going sell, I'm going to order type as a stop order. And I'm going to put my stop price at 58. It's currently trading for 70 cents. So obviously that's this is a pretty volatile contract, but stop at 58. And this would guarantee myself a 20% on the play. I'm going to move this stop up into the 60s here if this looks like it wants to play out, but let's just give it a second and we'll come back to it. But yeah, IWM breaking down, it looks like off of some of the dips that we held up in pre-market and the initial open. So let's see what it wants to do here. It doesn't look too strong. I mean, I think we can reach, in terms of a reach target, could be come down to 192, top of this gap from a couple days ago. But yeah, so the stop loss is at 58 cents. We need to bounce back up to like probably close to this 194 to get taken out on that stop loss, which would still be a nice trade. So that's kind of how you got to play. This could be, we'll see what happens. Now it's 63 by 64. So it bounced back a little bit on this IWM play. Hey, I'll take the $10 gain on the small accounts. Pretty freaking good. Can't complain. Just one of my AMC 22 puts, 20% killer. Yeah, so the IWM put right now, I'm up 32%. I'm looking on my phone. I look on my phone. I mean, this is the actual chart of the option. On my phone, I'm looking at it. But I'm up 32% on the position as of right now, given it being at 63 or 64. But the stop loss is at 20%. So if we come back and this area holds up, I get stopped. I might get stopped here if this bounces up enough. If this bounce is strong enough, I might get stopped, and then it may go lower. But whatever, I'll take the 20% gain on the small account. Realistically, that flush to VWAP, if you had multiple contracts, just take half of it off on that flush, and then now you can let this thing play out. And then in a perfect world, what you would want to do, or maybe I actually only use $50 of buying power, so I could play another contract. I could play another option too. Is if this starts to reject again, you could look to reshort it, on a pop back up. So I had the Friday expiration, so it looks like I'm going to get stopped out unless we dump back off here. I'm probably going to get stopped out on this IWM at 20%, which is fine. Could have had like 30-ish, 35. Yep, stopped. Okay, so that's fine. So we got stopped on that 58. The thing is, you kind of look at these and you say to yourself, well, this could be, it could be bigger. You got to put the stop at some point on when you're up that big. So I just had to take it. But you think that could be one of those, like, you only need to get lucky like once type of plays. Because if you think about it, if this were to unravel, like we were saying, like if we ended up getting this to come down and we get this move down to, let's say, 192 today, right, on IWM, that contract goes from 48 cents to like $1 plus, right? That's a pretty big needle mover on a small account. Honestly, I still like this play versus right here. I still like it versus 194. So I'm not in. I locked the gains. Small accounts back over $100. Roughly like a 9% day. I guess on the account, I only play with half my buying power. So I could still play something else, but I'm not gonna, get cute and try to force something. No need in my opinion for now. But that was the IWM, so that was nice. It worked out. But yeah, you had to play it. The entry was kind of key. So you had to get the entry. We got the entry like up here, like 194.30 was where I kind of got in. And the stop loss was about 40 cents to the upside. And then, take profit, good spot at VWAP. We pretty much could have snuck out a few more percent in gains, I guess, on that. But not bad. Put the stop on it. And then if we happened to just dump off and just go lower and lower and lower, we would have just been moving the stop up and up the whole way. And then, it would have been a really nice trade. 23% on the SPY put. Killer off that SPY. Let's see where SPY's at. Yeah, this doesn't look good. I mean, you could probably get a bounce back up, but if we establish a lower high here, or we can't get above VWAP on SPY, it's a very, very good chance this is what it looks like it wants to do today, despite a bounce here. I mean, hey, you got a pretty big flush. Now let's see what happens. So now if it respects this area, which is VWAP, to be the top of the range, boom. We're back on the short play of the short side of things. So Mara, I still have this short. Believe it or not, look how close it got. I had a stop loss at 15.75. I had an alert there, and I would have gotten stopped out if we closed a 5-minute candle over that level. It got so close, didn't do it. I have an average thing at $14 on this short, but the risk reward is solid for a swing. That's why I'm playing it. But yeah, this is kind of giving it all back here on Mara too, believe it or not. Let me see what I got to do here. I got to get rid of this Apple, and I guess it's just a fractional share, whatever, from a free stock I got. Cool. Pola's up 4%. This is another one. I want to buy this thing. I really want to buy Pola. Honestly, 3 or less. I think we can get it to fall back below the 50 SMA. I want to buy that. I personally, maybe we don't get it, but I would like that. PPSI at 350. That's good. But I would want to see PPSI come down closer to 3, if not below 3, if we got a pullback. That's what I would want to see. Maybe we get it, maybe we don't, but that's the deal. These Soxel 15s, I might honestly see if I can get rid of one of these guys just because, the 25s are not really worth. I have 3 of these and I have 2 of these. I might get rid of these, one of the 2 of these. The 15s, I'm going to get rid of this now just to free up some cash because I think we could see this come down, and I don't really necessarily want to have this thing go from, it's like a wasting $300 if it falls back off to my average or $400. So I sold another one of those Soxels. They are January expirations. I just think we can get them lower. Maybe we don't, which is why I'll still hold one and I'll hold some other ones. But I'm going to leave that for now. And my plan is to be, if we get a pullback in the coming month, the plan would be to buy some March expirations on those guys, just so we don't have to worry as much, and they're not like super short-term options. So we'll see. I'll spend my profits on Uber Eats again. U.S. hasn't been threatened by a hurricane yet. Yeah, I think so. I mean, that's the thought process that I have too. And they'll provide better dip opportunities if market was to go lower. So that's why I'm holding out of being super heavy in them. We can look at some of the forecast models right now and see. I got the inside scoop, guys. This is what I technically went to school for. At least what I originally started to go to school for. Let's see. We got to go to hurricane. Actually, no, I got to go to change this region to the North Atlantic. Let's see what we got. This might look like absolute, just like a mess of nothing for most people, but for me, at least, I know what I'm looking at. Essentially, what I'm seeing is across this forecast model throughout it goes out to August 26th, which, by the way, forecast models out after 10 days, after 7-10 days, don't even bother. It's like a waste. But there's not even a sign that we see any substantial tropical hurricane developments. That could change. Things could change. But going out this far, even out for like the next week or so, not seeing much, if anything. And maybe what you generally would look at in the Atlantic is stuff could form anywhere technically, but off of the coast of Africa, which is like down here, bottom right of this picture, you want to see like a low pressure coming off, which we kind of got one. It's not very, if you saw a hurricane, you would know it would be this massive blob, oranges and reds circled up, and it would be really like crazy. Forecast models are not projecting anything, at least that far out. So, it's kind of, for now, quiet, which is good. I think it's a good thing because obviously, first off, because you don't necessarily really want people to get destroyed by a hurricane, number one. But also, if you're looking at those stocks that tend to rally off hurricanes, it provides you opportunity. Like there's nothing here. No one's talking about it. There's no reason to think about it for now. Provides opportunity potentially to sit back and load up on some of those plays if that's what you want to do. So we'll see. You graduated Miami with a minor in meteorology. I graduated Penn State with technically my major was meteorology, minor in energy business finance. That's crazy. Jeez. Live in Florida. Please don't mention hurricanes. My parents have always wanted to get they live in Georgia now. They always have wanted to get like a small condo or something like that. On the coast. And my mom loves Florida. She loves the Gulf. She loves the Gulf Coast, kind of quieter, nothing crazy. I'm like, Mom, I know that's what you really want, but I'm just like, me as the meteorology background type of guy, I'm like, oh, I would be stressing my out every time, every hurricane season, every single time. But I'm sure depending upon what you get, a lot of that stuff, the structures these days are pretty solid. And obviously, if you're on the water, a lot scarier than if you were, decently off and you're like, decently off into the mainland a bit. But you can get this. Weather's been nuts in terms of like these storms keep getting stronger and stronger. So just because we don't have any, they're projecting an above average season, but just because you don't have any storms now doesn't necessarily mean that there's not a beast potentially lurking at some point. Don't let them do it. I live in the middle of the state for a reason. No, I have recommended against. I have recommended against. But they're going to do what they want to do. Not now. I've told them also at the same time, and I think they're aware of that too. Current market right now, it's kind of like, not sure I would be super thrilled with buying even right now. I guess things have come back off of the highs, but I think that maybe there's a better opportunity 6-12 months from now anyway. They're not buying anything soon, but like it's something like for retirement. They're thinking like, hey, like maybe we want to retire in, Florida or whatever and live on the coast. Sounds really cool for like 99% of the time until that one day comes, right? They make you evacuate over and over if you live. Yeah, I'm sure that would be part of it. That would be part of the consideration. Are you in the flood? What evacuation zone are you in and all that stuff. All right. So what's the 10-year doing right now? Let's see if the 10-year's done anything. 10-year, 2.72. So it's just chilling here. It's nothing crazy. Honestly, 10-year has to fall below like this 2.65 to give us a shot to come cracking back down. It's funny because you look at like a Bill Ackman and big names like that. He's like long. He thinks this is going up. He thinks this is going at least back up towards 3+%. He thinks bonds, Fed's got to raise a lot more. And it very well could be proven true over the coming months. Like if we kind of think about this, step back and okay, what just happened today? CPI, all this stuff. If this red line just flatlines and is not able to, I forgot to bring the webcam back. This red line just flatlines and does not get back up above this or gets back above 6 or really can't get back down towards 5, they're going to have to continue to raise and they're going to have no choice but to do so. Not to mention, to be honest, a partial aspect of this is that the higher the market, the worse inflation probably is. Not necessarily perfect correlations, but people are feeling good. Their IRAs, their retirement accounts, their investing accounts have bounced back pretty nicely. If you bought the dip, you're feeling pretty good. Like, you might actually be green. Like it depends. I mean, I have forced my girlfriend to be like dollar cost average into VOO. And so she gets like whatever from her paycheck and she puts X number of dollars in to an IRA. And then she like forgot to invest essentially the past like 6 months, which is, no, maybe not past like a couple months. She forgot to buy. She's like, oh, can you do it? So I go and I log in and I did it. And I'm like, dude, this is awesome. Cause like, well, from my view, I'm like, your account is like just off all-time highs. Meanwhile, the market's down like 15% off the highs. I think it was like, I forget where it was, but we were back in here. We were back sub 390 on SPY. And then I took whatever money that had accumulated in there and I just tossed it in. And then, I looked last week and she was at all-time highs, even though, right, the market's nowhere near it. That's just the power of dollar cost averaging, right? So that was cool to see. But it just proves the point of the dollar cost average strategy and why, people love it and why it works. All right, so SPY gave us a little bit of a dip here, and now it's trying to rally back. Trying to go back. Let's see what IWM is looking like. Where is this? Oh, this thing bounced back pretty hard. Look at that. IWM, very, very hard bounce back. So that trade actually looked like it was that stop loss was actually a really good stop, believe it or not, because we would have been red if we still held onto it. Now you want to see if it gets rejected by these highs here. If it can't hold or it can't get above this high of the day. Let's see what it wants to do. Let's see if anything else is going. XBI is up percent. Nothing crazy. XBI actually. This actually looks pretty weak. This looks pretty weak actually. Yeah. Here's your wedge. VWAP is your resistance. So you want to, if you were going to play it, you'd short it versus VWAP. And you'd look for this. Ideally, this is a bear flag. Ideally, this is what you want to see. If you're looking for a bear flag, this is what you'd look at. And look for a flush through here and probably a gap fill back down here. That's what I'm seeing right now. I said I would stay away from XBI on the small account, and I think that is a very good idea because I'm going to check these options and see what the option chain looks like on XBI. I can't imagine that the spreads are great. Unless you're playing in the monies, like deep in the monies. I can't imagine the spreads are too nice over here. Let me see. Pull up my phone for this week expiration. If you were to go for like, what's that, 91? You go for like a 90. Yeah, 90 puts are going for 69 cents by 77. So it's like a 10% spread. Nothing great. The 91 puts are going for 100 or going for $1 by 109. So it's still a 10-cent spread. You got to go deeper into the monies to find the spread percentages decreasing substantially. So what you could do here is you could play Labu puts, or you can play LABD long, just shares. And if this breaks down, then, those would do well. But those are other options to play if you were interested in doing that. Relatively weak. Yeah, XBI relatively weak. And this has been, believe it or not, like if you look at XBI, you can almost use XBI as kind of like your market gauge. Like XBI in a sense has been front running the overall market moves just by a couple of days. It seems like it's just ahead. When XBI is strong, right? Market might not be necessarily there's a point last week or 2 weeks ago where XBI was up massive and market was down, it was red. So LABD spreads are crazy. Yeah, so maybe it's not a good idea. Can you look at LAZR? Let's see. Luminaire Technologies. Oh, that's pushing up today. It's up to 925, 924 right now. That's a nice little rounded reversal move. Although you are coming up into this from 950 to 1050 volume node and prior resistance. So this is the spot. That's your spot right there. So we're getting up into it. So this could be a good take profit zone if you happen to be long off of the lows. You would have gotten a nice move. But I'd be cautious as we are coming up into an area that it should struggle. And, if the market wants to cooperate too, it probably will. All right, let's jump back. So what do we got? So IWM has been kind of weak. SPY, look at that, snapped it right back. Now let's see if it makes a lower high overall, though. IWM, believe it or not, looks pretty freaking strong. You can't deny it. It's actually, IWM is now outperforming QQQ. QQQ is a lot weaker than IWM. So small cap's a lot more strength, relatively speaking. But if this is a lower high right here, this could be a nice trade again to the downside. Let's see. Let's see if I can identify something. Maybe take a double dipper on this, but it's obviously it's a risk, but we don't want to risk. You wouldn't want to risk. I wouldn't want to risk today's gains on the small count. So let's just see what we can do. See if I can find a contract that makes sense. Now, obviously, it's pulling back, so maybe it's not worth. If it starts to dump, I'm not going to touch it. But you can look at today's expiration. Today's expiration, 193 puts going for like 20-something cents. They could be, if that goes against you, they could be wrong very, very fast. So maybe I would go for Friday's expiration. It's probably a better idea. Friday's expiration, let's see. If I went to 190, you can play the 188s puts. Only problem is that if this doesn't happen fast, this is going to be decayed pretty quickly. Let me see if I can pull up this chart of these guys. Yeah, they moved a decent bit. They went from 24 cents to 37 cents or 39 cents. Might not be a bad idea. They're at 22 right now. I would want to get this thing a little bit higher, though. And it would be, essentially, if we start pushing up to these highs, you get out, or this thing could be a couple cents of a gain if we fall back to VWAP. Kind of get me to like IWM. The reason why is because the options, like this is, if you play SPY options, right, because, and even QQQ, because SPY and QQQ are $300 for QQQ and $400 for SPY, the options are going to be a little more expensive, even for, short-term expirations. IWM is under $200, so the options are a little bit less expensive, and then it still can move like SPY or QQQ. So it's still going to move pretty good, and the options are just a touch less expensive. So what you want to do is probably play, you could theoretically play IWM, whatever, and then you can play TQQQ, SQQ, or SPXL, or SPXS on SPY. So play for SPY and QQQ, go with the 3X ETFs, and then for IWM, you can play the options. There's, it depends on what you're looking at, I guess, but it's an idea. Because here's what I've come to realize, and realistically, we've talked about this before too. At the end of the day, if I was going to get into like an XBI, or if I was going to go into Amazon or Apple puts or this puts or calls or whatever, right? you're still going to look at SPY. You're still going to look at how the market is doing, right? You're not, it's not going to change. Like, so you're still looking at the market for answers. So why not just play the market? Why not just play the support resistance off the market? Play IWM, small caps, the ETF, play the S&P 500, play the NASDAQ, play QQQ. Like, why don't you just play those instead? So that's the rationale. So I don't know. This is it's been an eye-opening, I guess, to play the small account challenge for the options. It's been eye-opening, but it's been fun. ARK is trying to get back over 50. Let's check in on XBI, see how weak it is. I'm not touching the IWM puts right now. I'm just going to see how it handles the next few minutes. Of course, I just spilled water all over myself. Sold 3 laser number 15 calls for 59 cents each. They got an upgrade of $14 PT. Okay, that makes sense. That makes sense. Why she's up. Oil, look at oil. Oil plummeting down to 88.35. Actually, it was lower than that. 87.64, whatever it is. Bitcoin 20, it fell back below 24K. Let me check on Mara. My alerts didn't go off, so I'm still in, obviously. It's at $15. Hit up to 15. I mean, we'll see. I mean, I'm betting it. The bet on this is almost a hedge. It's betting on a pullback. So it's, we haven't necessarily cracked down below, but to be honest, I like the risk reward of trying to get in a little bit higher up. So that's what I like to do it. But it's at $15. It's up 6%, which is fair enough with Bitcoin up. What's Bitcoin up? Bitcoin's up 4% today. So that's fair with the market being super strong. Not surprised that Mara's up this much. But 85 on oil, I think is a good risk reward. Then that may be some of those oil stocks. Let's look at ExxonMobil. Because, let's see. What is Exxon doing? It's at 90. Exxon's holding up pretty well, to be honest. They had a good earnings, I think that's why. But it held up pretty well, relatively speaking. Which is interesting. Very interesting. Okay, let's jump back in here. What do we got on little XBI? XBI falls below. If it drops below this, what is this thing? 91.75, it's going to dump. Probably get a gap fill move. But that's a spot. 91.75. So 25 cents from here. And a good chance we get a gap fill move back down. Here's SPY is 50 cents away from pre-market highs. It's maybe we do rip. Maybe this thing just wants to rip out. We had a little bit of a fake out to the downside, and she's going to play some games. That's been the story, I feel like, the past couple of days, past 2 week and a half. It's been games, just playing games. Oil, I mean, if oil did get down to 85, here would be the perfect scenario. In a perfect world, here's my scenario. This CPI would have come in a little bit higher or come in at expectations, right? 8.7. Let's just say, well, it came at 8.5. It didn't, so it didn't, right? But let's just say it did come in at 8.7. Perfect world would have been market sells off on this. Next couple of weeks, we're kind of in a downtrending market. SPY pulls back 400, pulls back just below 400, whatever the number is. Okay, whatever. And then next, oil comes down. Oil's down to the mid-80s. Then next CPI comes out. That one surprises lower. Oil and gas have come down a lot. That CPI comes down a lot, starts to come in. And then that's when the market can see a pivot and we rally from there. That would have been a perfect world situation. I would have loved that to happen. But I think the risk, to be honest, on the next CPI is that the CPI doesn't come down very much, or the core CPI doesn't come down very much. And that oil and gas are going to be coming down, especially if that trend continues. But the risk there is that next CPI doesn't come down very much. And then what happens is all of a sudden now you're dealing with the Fed got to hike further, and maybe it prolongs that thesis or that the view of a reversal or a pause, prolongs it out, and then we get a pullback into, let's say, October timeframe. Maybe. Let's see. Maybe some profit takers. Bill Ackman down bad in his trade. Michael Burry with his outputs. Yeah, I mean, they all are. Yeah. Seeing, I'm going back through some of the comments. Yeah. Yep. Seems like SPY potentially a lower high here. Let's see what we got. IWM. Oof, man, it's not a bad idea. I've been eyeing the 188 puts for Friday on here for 22 cents. It's just where my eye has been. I've been watching how they've been trading the past few minutes. I do think that if this could be risk reward wise, not a bad idea. It is kind of playing with almost house money in a sense, because I made 10 on the small account. As long as I don't lose 50% on this position, I'm still going to be green on the day, so I could play it. And it would be a minimal risk. I think if we get a little bit higher, one more little push here, I might take it. They're going for 21 cents by 22. They've been stuck at that for a while, so I would like to see it. Yeah, see now 20. They're going for 20 by 21. 20 cents would be good on those potentially. 75 puts the next mole could be a winner by September. I mean, if that 85 hits on oil, yeah. SPY is about 30 cents away from a new high. So believe it or not, we're ripping back up. So it's funny. We thought we could see more of a trend day, and doesn't seem like, at least for now, we got the first hour and 15 minutes in. Doesn't seem like we're going to get that. I think this is going to be a very, SPY little pull. Little pull. I'm going to take the IWM because I think the risk reward here is really nice. Either it's going to blast me through and I'm going to get taken out for small loss, or this is going to be a nice little trade. I'm trying to get filled at 20 cents on these 188 puts for Friday, but I might not. It might not fill me if it just starts to pull back from here. I need a little pop through this to get filled. But yeah, if we close a 5-minute candle over this high of the day, we'll cut that one off. So cutting into a few dollars of the gains if it does do that, but also could double down if we do get a big pullback. Let's see what jump back to Webull. What do we got going on here? Anything moving in this account? Not really. To be honest, I think it's just kind of like sitting flat across this thing. Yeah, Polo's up a little bit, up 6%. It's pretty good. PPSI, 3% hasn't really moved. The Labu calls are back up to 440 by 460. I have 5 of them left. Five of these January Labus. I sold another one of those Soxels, like 6 something. The 15 calls. Maybe those end up playing out, but I sold those for now, and we got the hedges all in place. The hedges are all down today, but they're not down that bad. I mean, if you look at the big picture across the market and SPY and stuff, all the hedges that I have in place, realistically, if SPY was to go to 430, then they'd be down pretty bad. But they're, even where SPY is at right now, they're still very valid hedges, and they're not that far off from all being green. I mean, they were all green yesterday. So, and they're still over a month out to expiration. So, all right, IWM doesn't seem like I'm going to get filled on this. I need a further push to get filled on the 20 cent. But we're like 40 cents away from SPY hitting a new high. We're like 20 cents away from IWM hitting a new high. So it's be a very, very quick trade. If it is wrong, it's going to be very quick. But if it does start to reverse on me right here, of course, I'm going to get screwed. Not screwed, but I'm just going to miss the entry. I'll modify the entry to 21 cents. That's it. That's as high as I'm going to go. 21 cents on these 188 puts for Friday on IWM. Just the risk reward is looking good versus essentially today's high and Monday's high. Let's see, and then we'll probably wrap it up. I don't want to stay. Well, not that I don't want to stay too long. I do. I would love to stay. I would love to stay, but I haven't eaten anything today, and it's almost 10 a.m. my time. DBC ETF commodity thing. Let's take a look. Let's see. Interesting. Yeah, this is not a bad one looking at. Just as long as it holds the 200 SMA right here, which it's been, not a bad look. Not too shabby at all. Tesla's bouncing up a little bit. It's up 2% now. Good hedge. Yeah, not that's true. Double down my SPY put at noon if it hasn't sold off by then. This IWM, man, I'm so close to getting filled. It just doesn't want to fill me here. Come on. But you kind of see the value of proactively taking gains, right? And depending upon the market conditions, right? This is, I guess, this choppiness. We haven't really seen much trends. Of course, now for whatever reason, this is not filling me. Now I got filled. Finally. So I got the IWM. Honestly, we might get stopped out in like a few minutes here. But I want to see a 5-minute candle closing above this high. So ideally over like 194.70, I'd want to see. So I'm going to give it, it's actually, we just started a new 5-minute candle. So I'm going to give it the next 5 minutes. Maybe I get faked out. Yep, sure, possible. But I'm going to give it some time here. And worst case scenario, I'll lose like $2. So I'm, on the small count play, it's a very valid trade, I think, versus this area. Oh, little rejection here. Maybe we're going to get the same thing. If we get a massive red candle on this, that would be killer. That would be killer. Did someone say food? Yes, I am hungry. I'm going to need to eat something soon. There's probably a protein bar. That's probably all the extent of my meal. Let's check in on the Robinhood portfolio. Hey, $200. How's the week done, though? It's up 0.5% in the past week. It's pretty good. Not to the highs of yesterday morning, which were the peak was what we saw this week. Not too bad. So anything else? Anything that's threatening here? CCL, I have the 11. Believe it or not, the CCL $11 calls here. Believe it or not, it's 60 cents away. It's up 10. CCL is up 10% today almost. That's pretty crazy on CCL. That's nuts. Looks like we're ripping through on IWM. So we're ripping through. Let's see if we get a 5-minute close over that blue line that I have running. We got about 3 minutes to go until this 5-minute candle is to close. So we're gonna see. Breakfast sandwich sounds fire. So what I actually tend to do, I just make my own like bagel. I got a toasted bagel, get a little egg going. I put a little bit of egg beaters in a pan. I guess egg whites, whatever you want to. Essentially the same thing. And then crack a whole egg into the middle. Then toss a piece of cheese on, flip it closed, flip it again. So like take it into fourths from the pan. Then that generally comes into like pretty much the perfect size to then, flip onto the bagel. It's been a go-to as of late. CCL 10%, man. I'm surprised, but then again, it's been a pretty volatile name, right? And with the market ripping the way it is, not surprised that it's showing some strength. Yeah, it's almost over the highs of Monday. Monday it hit like 1050, so it's up there. It's 10%. That's pretty good. But if it hits $11 this week and closes over $11, sure, take me out. I'm fine with that. Can't take it. So hungry. No, I'll probably wrap things up in the next few minutes. Double checking in on fear and greed. Come back to neutral. Refresh that. Neutral. There it is. So there's that. We talk about sentiment. We talk about this. We talk about Fed current rate hike expectations right now from Mr. Powell for about a month and a half out. 62% chance of a 50 basis point hike. CPI from last time. Here's CPI for, again, just to remind everyone. CPI came in at 8.5%, so it came down from the 9.1. 8.7 was the expectation, and we got an 8.5, and everyone is seemingly pretty happy for now. But let's see how this ends up holding up, and if we get continuation, if we get a bigger move, let's see what we get. All right, IWM is going for it. Probably going to just stop it out here. SPY, believe it or not, look at this. This is where I'm a little bit skeptical. I might hold this for a second. I'll do a 5-minute because SPY is still not getting through. Now, of course, IWM can do its own thing for sure, but I'm going to give this one a little bit longer because also, now I look at it, I'm only down like $1. So I'm literally down 1%. So let's see. If SPY starts to push through here, that would tell me to get the hell out. But this is actually right up into resistance, give or take, a few cents. I'm gonna give it a little bit of a leash for now. But I'll be quick to take this thing off if SPY starts to push up and break through here, because it's not worth holding that. Don't forget the chives. I think people are still scared to invest. I don't see that 50%. I know it's kind of weird. I felt like maybe if we saw a pretty nice rally or squeeze out. Maybe this is it. Maybe this is the squeeze out rally that we're looking for here. And if this rally was to sustain or for a couple more days, maybe people start feeling better towards the end of the week into next week. I don't know. But I agree. I mean, it still feels like you've got a lot of people on the CNBCs and the social media that are like, no, man, we're going lower. This market's not going to hold up. This is going to collapse. The bubble is going to break. It's going to burst. This is going to go down. Like, that's the feel. I still feel that in general. But I think if we got a pullback and then you got everybody calling for new lows, that could be the fuel for the bounce, for a bigger bounce. If the pullback was substantial, but of course we actually need to see a pullback, which doesn't seem like we've gotten it at all. There's been like the pullbacks to the extent of like a couple bucks on SPY. I'm talking about like a $10, $20, $30 pullback on SPY is like an actual pullback. We haven't gotten anything like that. Smith & Wesson doing pretty good. We'll go another like 4 minutes. Yeah, this IWM, obviously you've got the 5-minute close above, but I'm just only skeptical of this because of SPY, because SPY is up at resistance as well. And if SPY was to pull back, I would imagine IWM, it will most likely come with it. So that's the only thing. They do trade a little bit on their own. If you were looking at XBI versus SPY, that's two different things. Like generally speaking, if the market's up, yes, like generally speaking, if market's up, XBI should be up, but we've seen the reverse of that too many times. So it's not like a perfect correlation. IWM and SPY tend to be generally up and down. Like they don't have as much variation in terms of like, oh, IWM is way up today and SPY is way down. Like generally speaking, you'll just see, okay, we can see relative strength here or, relative weakness here, but that's what I take away from them. But I'm actually very surprised at how quiet it feels. Like it's just, we aren't, there's not much volatility here. So that VIX has got to be getting killed, right? It's down 9%. Yeah, look at this. That VIX is getting destroyed. Jeez, look at that. Look at that candle on the VIX. That's a massive, massive red candle on the VIX. Jeez, and then there was a lot of people, I guess looking back, it wouldn't have been a bad idea, but there was a lot of people that were like, yeah, I'm buying the VIX here and I'm loaded up here as a hedge. Thought about doing it. I personally thought about some maybe UVXY, but I didn't take it. But looking back, jeez. And it could reverse. It obviously could, but it would be hilarious if the VIX, right, dumps down to here and then all of a sudden spikes up to like 30 again. Jeez, that trend, man, that cracked. That's a true breakdown on the VIX. That for sure is. Ammo's doing well. I'm looking at gold too. What was gold? Is gold still up? Yeah, gold's up. It's up over 1,800. Silver, yeah, it's doing pretty well today. Bitcoin still at 20. Bitcoin back at 24. Look at that. Bitcoin just teetering on that 24. Oil's at 89. What else was I looking at? The 10-year. 10-year is at 10 years actually come back a little bit from where it was about an hour or 30 minutes ago. 10-year came up or plummeted down to 2.67, bounced right back to 2.77 almost, then bounced or then shot right back down to 2.7 and it's back to 2.73. So it's not down as much as I would have. Well, not down as that much realistically right now. If we were really feeling like this is the end of Powell's threat, strangle on the market in terms of raising rates, this would be coming down a lot more. So there's some hesitation there, and I think for good reason because we got to see a couple CPIs in a row. I think really starting to break down, or else I'm not buying it yet. All right, SPY is testing it, so we're either going to we're going to stop out on that IWM if this breaks through this 419. 419 breaks, I'm out on SPY. It's only down like $2 on the put play, so just eight back into like a few bucks of the gains, but I'm not really worried about it. All right, there it is. So I'm going to take this thing off. Sell to close on this guy. I'm surprised, but also, then again, right, am I really? All right, so the small account challenge today is up about 6% on the account, $576 amount. It's not bad. Not bad. Fixed puts. Over 7%. Killer. Look, there goes SPY. So now here we go. We're pushing up. We are pushing up for now. 419 pre-market highs have broken. This could be a nice little breakout trade here on SPY. Same as IWM. Looks like it wants to go for a move here too. Yeah, it's pushing up too. So, all right, with that said, I'm going to wrap things up here. I appreciate you guys for tuning on in. It was a good stream, I think. We got a lot of stuff we covered and a lot of good stuff. So, yeah, we're going to chill. We're going to hang out. We'll do another one of these. What is today? Today's Wednesday? We'll do another one on Friday. That's the plan. Or maybe we'll do it tomorrow morning. We'll see, depending upon if we have anything interesting to talk about. If we're just chopping and it's just like slowly kind of moving around, maybe we'll just do our usual Friday stream. But if there's not much to talk about in terms of any active moves, I'm not doing anything really right now. So we're just chilling for now. Thanks so much for watching, guys. I will see you on Friday, and have a great rest of your day. Hope everyone's doing well. Hope everyone is green. Peace out.